warm welcome to all the members and all our guests present here, to our chairman, all the executive committee members. Thank you very much for being with us this morning. As you know, corporate tax completed its first year of implementation. Yesterday was the last day, and yesterday also we completed one of the first deadline of corporate tax registration, 31st May. In fact, today is the first day of the new tax year which has started. So here we are with our high-profile session with elite speakers who are going to share with us the continuous updates on this evolving UAE corporate tax law. Looking at the full house today, especially strong registration response. Actually, we opened the registration within 4 hours. 500 registration that was opened was over. We increased, and we could match to the capacity of the hotel. And thank you very much for your kind understanding. Actually, this also reminds us of our initial CA days, where we used to make friends, studying together, brainstorming together, and attending technical seminars like this together. And thank you all the members for your continuous support and encouragement to the Managing Committee of ICI Dubai chapter. We are here to serve you. So here we are to cover entire gamut of corporate tax, including registration, tax accounting, our favorite free zones, procedures and disputes handling, to POEM, permanent establishment, non-resident, and all the relevant area which is in the corporate tax law. Like before starting any occasion which brings us together, we always pay respect to our respectable nations who are paramount to our existence, our success, and our well-being. So let's all of us rise to pay respect to the national anthem of India, UAE, and ICI. Can I request technical team to play the national anthem, please?
अधिनायक जय भारत भाग्य विधाता पंजाब सिंध गुजरात मराठा द्राविड उत्कल बंगा विंध्य हिमाचल यमुना गंगा उज्जल जलधि तरंगा तव शुभ नामे जागे तव शुभ आशीष मांगे तव जय गाथा जन गण मंगल दायक जय हे भारत भाग्य विधाता जय हे जय हे जय हे जय 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 हे।
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं देवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
Thank you so much. To invite our chairman of the chapter, CA Rajesh Somani ji, onto the stage for his chairman's address. Can I request to put your hands together for the impressive chairman of our chapter, who always gives his 100% when he walks onto the stage. Big round of applause for the chairman, please.
A very good morning to all of you. Good morning. Yes. My dear colleagues, eminent speakers, former chairman, and today's chief guest, our own Sri Parasji, and welcome to all on behalf of our ExCom team members. We are passing through a very interesting time of learning with regards to the corporate tax in the UAE. There are primarily three main stakeholders group: implementing authorities, taxpayers, or business community, as well as professional and consultant. All are learning and updating themselves continuously as the law itself is evolving. UAE is transitioning from no tax regime to the taxation system, and this year being the very first year of applicability of the corporate tax, which I personally feel should be referred not as a corporate tax, but as a business income tax. Because irrespective of your organization structure, whether corporation or the proprietorship, all business income are covered in the gambit of this new taxation law. In its nascent stage, it is an ever-evolving subject, and as your ExCom, it will be our endeavor to organize various events from time to time to keep our members fully updated with provision of the law and its nuances. Keeping importance of the various provisions and subjects, we have invited 5 eminent speakers today. CA Pratik Botra will navigate us about the registration and compliances being the first year of law. Pratik has a rich experience of over a decade in various GCC countries and India, as well as in Big Four firms. Compliances are generally the first point of pain in any law, and good understanding of it makes the rest of taxation journey less complex. Welcome, CA Pratik. Thank you. Thank you. Free zone provisions. On a lighter side, it reminds me of my one visit to London Heathrow Airport. I was waiting for boarding my flight to Manchester and saw an advertisement of Virgin Airlines with the photo of its founder, Mr. Richard Branson, and under it, it read, "We are not as inexperienced as our name suggests." I repeat, we are not as inexperienced as our name suggests. Taking the same tagline forward, it is safe to say free zones are not as free as their name suggests. Although more will be discussed and clarified by today's expert speaker, CA Manu, but to my mind, gone are the days when free zone entities can be planned only for a tax-efficient structure. CA Manu has an in-depth experience of working with free zone entities and seasoned professional. On a lighter note again, his physics and height don't represent the true depth of the sound knowledge of his free zone expertise, which is far more. I am sure we will all take away key insight from his session. Welcome, CA Manu. every law goes through its natural cycle of differences and disputes. Needless to say, it is even more applicable in case of tax laws. Extra efforts are made in order to maximize saving from taxes, which results into the different interpretation of the text of the provision of the law. It is often a thin line which divide efficient tax planning and tax avoidance, which one forget at a times. In my opinion, majority of the disputes and differences can be avoided if we simply start accepting the law in letter and spirit that we have to pay 9% tax on the business income earned. Problem arises when we want to save the 9% tax with some extra efforts, which invariably results into complex interpretation of law or into tax avoidance practices. It is a major challenge and opportunity for all of us to be responsive as a responsible financial and accounting professional, not only to create the mindset of ourselves, but also our other associates to whom we serve as an expert or consultant or employees. It is also equally important to educate and update about the law to all our business partners and associates. Despite all sincere efforts, all laws have their own legacy of dispute and differences, which increase all the more when it involves money. There cannot be a better authority than an expert advocate to educate us about process and option to address various disputes and differences. We are fortunate to have among us partner and head of taxation of a well-known law firm, Al-Tamimi and Company, Mr. Siraj Khan. Welcome, Mr. Siraj Khan. Our next topic, which is always a hot topic for debate and discussion, is POEM, PE, and non-resident. Partner of leading consultant firm, Durva, C.A. Sandeep, brings vast knowledge of rich experience in this field. He has spoken at various conferences and events on this subject. There are three main activities or divisions of every business organization. First, preparatory work for doing business, buying and selling product. Second, final decision about business matters, including buying and selling. Third, availability of resources for doing business. The business issue of POEM and PE starts only when above three activities are not at same place, and it becomes even more complicated when decision-making and resources are sitting at different locations. Let us welcome C.A. Sandeep to impart us the more knowledge on this subject. Welcome, Sandeep. A group of chartered accountants like us cannot leave its own subject of accounting, particularly when it impacts taxation directly. Whether to draw opening balance sheet of the business for first year of tax, or to revaluation of the existing assets, or account for expenses rightly, or group the various businesses or entities under one umbrella, proper accounting plays the major role. We have with us a seasoned professional and expert, Mr. Basil, tax partner at Deloitte, the most prestigious accounting firm of the USA. Welcome, Mr. Basil. Our chief guest for tonight, Sri Parasji, who needs no introduction among our members, a well-known, accomplished business leader of UAE, always standing with the ICI Dubai chapter, even at a moment's notice. Welcome, sir, and thank you very much for your gracious presence and time. I would like to take the opportunity to share with you that your ExCom has successfully organized badminton tournament with rousing participation from about 150 members, and also for the first time, chess tournament with over 55 participants. Entire ExCom team, under our secretary, C.A. Rishi Chawla, made their best efforts in making the event memorable for all participants. A special round of thanks to C.A. Wahab, CA Greece, CA Ram, CA Prasant, CA Vijay, and CA Amit Mehta for their extraordinary support throughout the tournament as volunteers. Congratulations to the all winners and every participant. Well done, Team XCOM. We have planned to a cricket tournament on 9th June, and once again, thank you to all of you for overwhelming response to all the members. We have also planned for a technical event on 8th June evening on international currency market and anti-money laundering law, black money, followed by a study tour from 12th June to 18th June. We will also be having a Yoga Day celebration of 23 June with eminent speakers on business with great life and health without medicines. We had the opportunity of meeting His Excellency Ambassador Sri Sanjay Sudhir and Sri Amarnath, Deputy Chief of Mission of the Abu Dhabi in the Indian Embassy. We had a detailed discussion with respect to recognition of our profession and institute. Consultant, expert agency for members award have been finalized. First draw of lucky members out of paid members will be held on 8 June to give away 2 iPhones. The second and final draw for remaining 3 iPhones will be held based on all paid members up to 30th June. Please encourage your colleagues and others to become a member of the chapter. Once again, thank you all very much for all your support and active participation. Ladies and gentlemen, please join me in welcoming all our eminent speakers and our chief guest. Please put your hands together to welcome our speakers and chief guests for tonight. तालियां इतनी बजे कि ये हाल गूंज उठे और इस कदर बजे कि स्पीकर भी बोलने के लिए उठ खड़े हो. Thank you, धन्यवाद, शुक्रिया. Have a great learning session.
Thank you, Chairman Saab, for your Chairman's address. Especially the raffle draw of 2 iPhone and 3 iPhone is really, really impressive in the morning. And thank you for sharing the calendar ahead of us. Now, we are honored to have the presence of our chief guest, Mr. Paras Shahadpuri ji, with us, who is the chairman of Nikai Group and ex-diplomat of Government of India, and who always impresses me with his welcoming nature and unwavering smile. And who could do a better introduction for him than our vice chairman, CA Jayaprakash Agarwal, who always walked to the stage with an energetic presence. Guys, give it to him. Big round of applause for our vice chairman, Jayaprakash Agarwal.
I love that sound. It looks like a Bollywood event is going on. Thank you for that. Good morning, ICI. Energy nahi aayi. Good morning, ICI. That's called ICI Dubai when the energy is there. I tell you something. I tell you a story. Bolo bolo Baba kya mangta hai? Bolo bolo Baba kya mangta hai? These 6 words changed the history. He went to ask for a visa and he ended creating a brand for himself. I am talking about none other than Paras sir. Give a round of applause for Mr. Paras Shahadpuri. He was having his business in London, and during his trip from India to London, he missed his flight in Dubai. He waited in Dubai for 21 hours. He thought what to do. He went to the immigration officer asking for a visa, 1-day visa, to see the city. And he was not able to say everything in Arabic, so he was saying Arabic in whatever language he knew. And the immigration officer said to him, "Bolo bolo Baba, kya mangta hai?" And what he wanted was only a visa. And today, he is known as the chairman of Nikai Group, a brand in itself, Paras Shahadpuri. Yes, we can clap for a person. Sir, आपको मालूम था उस दिन कि आप वीजा नहीं मांगने जा रहे हैं, दुबई के लिए एक ब्रांड मांगने जा रहे हैं. He has been honored with many accolades and titles for serving the business community. He received the CEO International Achievement Award for 2012 at Power Brands Hall of Fame and was held for his contribution to the global electronic sector during Middle East Business Leaders Summit. In 2013, Forbes listed him as one of the top Indian leaders in UAE, and he has also been featured as 100 most influential global Indians. He started with commodity trading in 1988. We all know his career actually started as a diplomat for Indian government, but then to a businessman. With a round of applause, can I have the man, the brand himself on the stage, Mr. Paras Sahatpuri. A round of applause, sir. ताली इतनी बजनी चाहिए कि उनको लगे कि वो आईसीआई दुबई में फिर आए और फिर आए.
Namaskar, Assalamu alaikum, and wish you a very early good morning. Thank you, Rajesh Bhai, for inviting me to this great event. But I don't think I can thank you for waking me up from my sweet sleep in the morning. It's a weekend morning. I'm a little late riser anyway, so I had to get up also to see what subject I'm going to speak this morning. So I got up at 6:30, opened my laptop to see what I have to speak. Friends, today I'm standing in front of you, honestly, not as the chief guest, but as an uninitiated person who's a businessman coming to the well-initiated chartered accountants with a little bit of scream, "Bhai, bachao, tax aa gaya hai." So it's you people who will be speaking on the taxation and not me. You must have all heard the name of Benjamin Franklin. He was the great philosopher of the 18th century. He was one of the framers of the US Constitution. He was a great entrepreneur also. So he said very important, important saying which comes true even till now, that only two things are very certain. All the other things are uncertain in this world. The one is death, the other is taxes. So possibly we were in a dreamland of living in UAE, saying that there are no taxes. So initial thing came 6 years ago by way of VAT, and now the corporate tax. Abhi aage dekhiye hota hai kya, I guess. But I think it's very important step by UAE government to really implement this corporate tax, because UAE is not that small, tiny place anymore. It's one of the important economies of the world, the biggest in many fields, the shopping malls, the airports. So they have to be a part of the regulated formal economy in the world. And therefore, the initiation of taxation. Earlier, it was more like, sorry to use this informal word of dukandari. So now we are in the corporate world, where people are expected to maintain their books, have their books audited, and therefore, when it comes to taxes, pay the taxes also. Now, whenever there is a taxation, and particularly when this is an initial period of taxation, there are many regulations, and all these regulations have very nuances, and therefore very appropriate subject of the navigating UAE corporate tax, subtle nuances. Many times the life remains in nuances and not really the main regulation. And I'm reminded of a very dear friend of mine. Unfortunately, he's no more with us. God bless his soul. M.A. Rafiq, who was partner with the Ratan Mama and Company. So at that time, India and UAE signed double taxation avoidance agreement. So a point came that any income here and India, whatever was in the treaty, was taxable or not. So we all considered that Dubai is a tax-free area, and it was a wrong nomenclature of the words. It is not tax-free. So the Indian government imposed some taxes, and this gentleman, M.A. Rafiq, he filed a case and talked about the so-called subtle nuances. आइए वेंकटेश आगे आइए आपको इन्विटेशन आ गया आइए आइए come here I think your colleague. So the nuance was that this is not a tax-free regime. This is a zero tax regime. And for certain businesses, there is taxation, like for foreign banks and some oil companies. So I would like to read this particular sentence. The question that arises is whether the resident of UAE will be eligible to receive tax benefits under this treaty, which is double taxation avoidance agreement. In the case of M.A. Rafiq, case number such and such, it was observed that the term resident and liable to pay cannot be equated with the actual payment of tax, therefore making him eligible to the tax benefits. This is essentially the nuances which we would be possibly talking in this morning, that there are so many nuances in the rules and regulations, and the government is also very sharp. All those loopholes will be plugged like in any constitution or in any rules and regulations. Constitution of India was framed after 2.5 years of lot of deliberations. Even now we have about 1,000 amendments to the Constitution. So this is a cat and a mouse story. You find loopholes. Thank you very much, chartered accountants. And the government watches you and then plugs those loopholes. But still that's cat and mouse continues. So I must say that today, all of us, business people and other people, may be crying about the taxation and not in a great mood to pay taxation. Nobody is very happy to pay taxation. But the only one community and possibly one profession is celebrating and rejoicing, and that is the chartered accountant sitting in this room. Today he is a person with a premium. Congratulations, and you must applaud for yourself. The opportunity has come for you. And people like us standing here have to come to you to rescue us, to save us, and tell us what are those subtle loopholes, subtle nuances whereby we can manage our taxation. I think taxation is an eventuality which it has come, but still there are ways how to plan taxation, manage taxation. As responsible citizens and business people and entrepreneurs, I cannot think of evading tax. That's a crime, it's a criminal offense. I don't know whether the right word could be avoid, but certainly manage and plan. That's our right. So therefore, with this taxation, lots of people have been running to the free zones, because free zones possibly can help the business people and entrepreneurs how to manage and plan and avoid taxes and not evade taxes. So now today is perhaps the last batch of the elections in India today, yeah? So in the atmosphere and environment of the language, slangs, so lots of companies are establishing in free zones what they call khatakhat, khatakhat, khatakhat. So they are now rushing how to show their income in the tax-free zones. And again, they are not tax-free zones, I guess. These are the tax-exempt zones. And this exemption can be for some limited period, one doesn't know for 50 years or what. But whenever they want to regulate against some taxation, even in free zones, it is possible in the future. So I'm not here technical person or a qualified person to tell you. The ensuing panelists will be speaking and the persons will be speaking on various different subjects. But from a layman business point of view, I just jotted down a few points in the morning. Free zones, I told you, a very important thing has come up. And I was told by the Director General of 2 free zones that there is a sudden, like, gold rush, this company rush, people establishing companies in the free zones. So we would have to see what free zones can offer us to manage and plan our taxes better. Things like ESR, economic substance regulation, very important. We would have to prove that this is not for some fictitious or some not very real substance, that the companies are actually doing business directly or indirectly from the free zones. So that would have to be proved. Again, the nuances will be explained by our special panelists and special speakers on the subject. Transfer pricing regulation, this is pretty important subject, which I have not yet fully been able to understand. But there's a terminology. I saw my one friend here, Nirav, and some other people here, something called arm's length. So for the past 6 months, when I heard this word, I've been practicing gym to lengthen my arms and to see how my arm's length will be longer enough to justify 6% or 7% margins on our pricing, or it has to be 5%, or it has to be sub 5. So again, nuances. We would need to come to the premium profession called CA now, and I'm really emphasizing now more than ever before. So they would tell us what is arm's length, literally and metaphorically and professionally. So we are already in the VAT regime, which I said it, which has come in 2018. Permanent establishment, PE, these are the abbreviations which you guys know best. Again, which is the permanent residence of the business. Again, what are the implications, where to do. Today, the corporate tax is 9%. In some countries, it is 25%, but I'm told that if multinational company which is established here is paying 9% here, so if in its host country or the original business place, if it is 25, so 9 can be deducted out of 25, et cetera, et cetera. So that also gives them attraction to come here in the lower tax regime currently and take advantage of here and this place, and also show some expenses are again that transfer price mechanism which can benefit them extra 5% or whatever. Tax residency certificates. So all in all, as I said, I am not a chartered accountant nor tax expert, but there are lots of points of concern, lots of clarifications required, and in this session we would be listening to those clarifications, benefit ourselves, and see how we can plan and manage our taxation, and as I said it, take the help of our premium profession, chartered accountants. Thank you very much and have a good day.
Thank you, Parasji, for such an impressive address. Can we have a big round of applause for our chief guest, Paras Shahpuri ji? Thank you so much for such an impressive address where you have not only covered technical, but you have brought a fun element to it. So that was, the gym one was my, really gonna stay in my mind forever. And now I'd like to request our chairman, vice chairman, Jayaprakash Agarwal, Somani ji, and Surinder ji, our former chairman, to please join me on the stage for giving memento on behalf of all of us for our love and appreciation for you. Thank you. All right. One of the most talk of the town topic has been, when is the corporate tax registration date? The last deadline, like, of course, one of the deadline got over yesterday. Though the dates are being provided considering the license issue days as more to find out, however, complexities on the registration when you have a P or a poem or a non-resident still has many ambiguities attached to it. And also the resulting compliances after registration is an important area to understand. Though things might look simple, but we know the devil is in the details. To talk about this very relevant topic, we have a very senior professional with us, our very own chartered accountant, CA Pratik Bothra, who is currently the Vice President Taxation at Gulf Islamic Finance, and who has been the face when it comes to complex issues in tax matters. And to formally introduce him, may I please require our dynamic treasurer, CA Dheeraj Ranasaria, onto the stage with a big round of applause, guys. Thank you very much.
Good morning. Good morning, dear members. Anyone who stops learning is old, whether as 20 or 80. Anyone who keep learning, stay young. If you want to be young forever, keep learning always. As a today, ICI Dubai chapter always bring for you as a learning session. In the same line, today also we have bring the learning session on the corporate tax. And then in the same line, I am going to introduce our first speaker, Mr. Pratik Bothra. CA Pratik is a tax professional with over a decades of experience in the field of direct and indirect taxation. CA Pratik is a qualified chartered accountant from India and hold accounts diploma in international tax from Chartered Institute of Taxation in the UK. Currently, he leads the group tax functions at Gulf Islamic Investments, which is a leading financial service provider with AUM exceeding 4 billion USD. Pratik brings a diverse skill set to the table, managing tax, compliance, due diligence, merger, acquisition, even tax litigations. That's that time, little time for the litigations in the UAE. Pratik's passion for knowledge sharing is evident in his extensive experience as a speaker, having conducted over 30 webinars and seminars on the UAE, e-invoicing, and corporate tax at prestigious institutes like ICI, UAE of free zone authorities such JAFZA, DAFZA, Dubai South. He has a lot of experience in the corporate tax also. So please welcome with me to Mr. Pratik Bothra.
So we have been hearing about corporate taxes, the implementation, everything. So today is the first anniversary of corporate tax because corporate tax got live for financial year starting on or after 1st of June 2023. So today it's basically the first anniversary of corporate tax, and for some companies who have financial year starting from 1st of June, they have already done their end of the tax year. So today I'm here to speak on corporate tax registrations and compliances. Now most of you may have already done registrations for some of your companies, your clients or group entities, or are in the process of doing corporate tax registrations. So firstly, we see who is required to register for corporate tax. When we talk about juridical person, legal entities, who is required to register for corporate tax and who is not required to register for corporate tax. So firstly, as we all know, any UAE incorporated entity, be it a free zone company or a mainland company, is required to register for corporate tax. There is no revenue threshold like VAT law. There is no profit limit. There is no income thresholds. So if you are a resident juridical person in the UAE, you are required to register for corporate taxes. Along with this, we have a lot of foreign companies which would be required to register for corporate taxes under different scenarios. So the first scenario is in case a foreign company has its effective management and control in the UAE. So as per the corporate tax law, these companies would be treated as resident persons for corporate tax law, and hence they are also required to register for corporate taxes. Apart from this, any non-resident entities which are having a permanent establishment in the UAE, be it a fixed place permanent establishment, a dependent agent PE, or maybe a construction PE, these foreign entities are also required to apply for corporate tax registration in the UAE. In addition to this, there is a separate provision for companies, non-resident juridical person, who hold real estate in the UAE. So if you have a real estate in the UAE from which you are earning income, and this real estate is held by a company which is outside the UAE, maybe an Indian company, maybe a Cayman company, maybe an offshore company, even then you are required to register for corporate taxes and undertake relevant compliances. Apart from this, certain exempt taxable persons are also required to register for corporate taxes, such as qualifying public benefit entities, which includes your charities, the different organizations for public welfare. Then there are social security funds, pension fund, qualifying investment funds, which are exempt from corporate tax, provided you meet certain conditions, but you still need to register these entities. Then if we talk about who is not required to register for corporate tax, so we know largely everyone is required to register for corporate tax, but if we see at the bright side of who is not required to register for corporate tax, the law says any foreign company which is not having a permanent establishment in the UAE and is only earning UAE-sourced income is not required to register for corporate tax. So what it means is, if an Indian company, for example, is providing some services, maybe IT services, tech services, to an UAE company, it is earning UAE-sourced income because income is paid by a UAE entity to Indian entity. And it will be subject to tax in the UAE, but these foreign companies don't need to register in the UAE if they don't have a permanent establishment. So these entities would be taxed by way of a withholding taxes. Currently, the rate is 0%, as we all know, but in the future, it may increase to maybe a 5% withholding tax rate. Apart from this, any government entities, government-controlled entities, companies which are in the business of extractive and non-extractive natural resource business are not required to register for corporate tax unless they are doing a business or a business activity under a separate license issued by a licensing authority. So this is broadly all the UAE companies need to register. Foreign companies with PE, Nexus, or effective management and control in the UAE need to register for corporate taxes. Now, what is the timeline to register for corporate taxes? Like, when do we need to apply, when we need to receive the registration? So if we talk about that, then the registration timeline have been specified in FTA decision number 3 of 2024, which was issued and published on 1st of March 2024. So it says there are different category of persons who are required to register, and there are different timelines for those. So first, if we talk about resident juridical persons, it means entities which are incorporated, established in the UAE. So they have issued the timelines for their registration. So the first timeline already got over yesterday, like Rishi said. So if you have a license which is issued in the month of January or in the month of February, irrespective of the year of license, the due date was yesterday, 31st of May 2024. And the requirement is not to receive the registration. So it may have happened because there are a lot of people who are saying, okay, we applied for the registration yesterday, but we have not received the registration yet. So would we be also penalized because we don't have a TRN? So the law says you only need to apply by the due date. So if you have applied, you will not be subjected to penalties. FTA will take its time, like 20 business days, to review and give you the registrations or decide something else. But the main thing is you should have applied for registration. Then the companies which have the license issued in the month of May, the timeline is, March and April, the timeline is 30th of June. Similarly, there are different timelines for companies with the license issued in different months of the year. However, one important point, the last point on the slide is, where a company, a UAE incorporated company, do not have a license as on 1st of March 2024. They have to register, or they should have applied for registration by 31st of May 2024. Now, normally all the UAE companies, if you have mainland company or free zone company, you have a trade license, which has a license issuance date. But there are certain scenarios where you may have a Jafza offshore company or a RAK offshore company, where you don't necessarily have a trade license. What you have is a certificate of incorporation, incumbency certificate, but you don't necessarily have a license. So in those cases, again, the timeline of registration should be 31st of May 2024. Now, next thing is, there in UAE, it's very common for companies to have multiple licenses. So you have one main licenses if you are a retail company, and then you have multiple branch licenses across different emirates. So which license date do we need to consider for the registration? Is it the main license date? Is it the branch? Is it different emirates? So the law has specified that what you need to see is all the licenses, check them. Whatever is the earliest date of issuance, you need to consider that date for corporate tax registration. So for instance, if a company has a main license, which is, let's say, dated October 2023 or October any year, but it also has a branch license, which is dated, let's say, March or April, then the due date would be 30th of June 2024. So this is very important. If you have multiple licenses, please see which is the earliest issuance date. Then we talk about non-resident entities which had a permanent establishment or a nexus in the UAE prior to 1st of March 2024, prior to the date this decision was issued. So if you had a PE in the UAE as on 1st of March 2024, then you are required to register within 9 months from the date of existence of the permanent establishment. And in case you are a non-resident, which is earning income from real estate in the UAE, so you have a nexus in the UAE, you need to apply for registration by 31st of May 2024. So this is very, very critical for companies which hold real estate in the UAE through an offshore company or through a foreign companies. Now, what about the companies which are established after 1st of March 2024? So the FTA has detailed the registration timelines for those companies as well. So firstly, if there is a juridical person, resident juridical person incorporated on or after 1st of March, you need to apply for registration within 3 months from the date of incorporation or establishment. So please be careful. Whenever you receive a new license, you incorporate a new entity, apply for the registration within 3 months to avoid the penalties of late registration. Then for any foreign companies which have effective control and management in the UAE, they have a time of 3 months from end of the financial year to apply for the corporate taxes. If a new foreign company sets up a permanent establishment or a branch license in the UAE, a fixed place P or any other P, they have 6 months to apply for corporate tax registration from the date the P is established or recognized. Any new non-resident who purchases a property in the UAE and earns income from it, having a nexus, they will have 3 months from date of nexus to apply for the registrations. And when we talk about resident juridical person or, natural persons, when we talk about resident or non-resident natural persons who are subject to corporate tax in the UAE because their turnover exceeds 1 million dirham, they need to apply for corporate tax by 31st of March of the subsequent calendar year. So for natural person, FTA has said that your Jan to December calendar year will be your tax year. So if you are a natural person who is a resident in the UAE undertaking business activity, you can apply for registration by 31st of March 2025. So next we see about the practical considerations of corporate tax registration. I'm sure many of us have registered for corporate tax, we would have faced certain issues, or when we are hearing from other people that there are a lot of issues while you are registering for corporate tax. Some fields are not there, there are some mandatory fields, but you don't have the information to provide. So firstly, corporate tax registration started last year, and FT opened it for a small segment of people. They were inviting, sending an email to the taxpayers that you can apply for the registration, and they were open for the entities incorporated in the UAE as well as public joint stock companies, PJSCs. But as on date, the corporate tax registrations in UAE are live for all the major categories. Companies incorporated in the UAE, foreign entities which have a permanent establishment in the UAE, even if you have a trade license or you don't have a trade licenses, you can apply for corporate tax registration. Foreign entities having effective management and control in the UAE, there is an option to apply for registration. So largely FTA has opened all the different types of corporate tax registration which were applicable. And if you see, they are updating these things every day. So they are updating Imaratex portal, they are bringing new functionality, new fields every day as we speak. So please keep a note of the portal, keep checking if there is any new update which could be relevant for you. Another important update is that if you have a Imaratex account, FTA login credentials, you need to link it with the UAE pass by 30th of September 2024. Because from 30th of September 2024, you can only register to Imaratex portal via UAE pass. You cannot register with the email address and the password. So if you have not registered already, please do it now to avoid any issues to access your FTA account. Now normally is when you are registered for VAT or excise taxes already in the past and you are applying for corporate tax registration of the same entity, the process is a lot more easier because most of the information is pre-populated. Your trade license details, your incorporation date, your legal entity type, all these fields are already populated. But what you need to be mindful about or consider is that if any information has changed, let's say your license has expired or any other detail has changed, then you need to first update those details on your Imaratex portal before you apply for a corporate tax registration. So please be mindful of those things. And then FTA has 20 business days to apply, to review your application, approve the request, give you the TRN, or maybe even ask certain additional information if they deem fit. Recently, 2 days ago, there was a major update on the FTA portal. So most of you who have registered the entities for VAT or corporate tax, there used to be a challenge where you have to provide the details of business owner. You know, there is a field in the registration where it says if someone holds more than 25% shares in the company, we need to know the business owner details. And if it's a legal person, the challenge companies were facing was that there was no field to put that the owner is a foreign company. So if you are holding companies, let's say an Indian entity or let's say a Bahrain entity or a Saudi entity, there's no trade licensing issuing authority which was, reflecting those countries. So 2 days ago, FTA has introduced a new field which says Foreign Licensing Issuing Authority. So if your license is issued by any foreign company for the business owner, you can select that, and once you select that field, a lot of mandatory information otherwise becomes optional, such as the names in Arabic becomes optional. If you select that, the trade license number, expiry date becomes optional. Then there are certain UAE offshore companies which were required to again register by 31st of March. And it's not that all the issues have resolved already. There are still certain teething issues in the registration. So for instance, if a foreign company has permanent establishment in the UAE and it has multiple branch licenses, maybe one branch in Dubai, one branch in Abu Dhabi, right now the FTA portal is not allowing to upload more than one license details for that. So there are still certain, challenges which you may face while navigating the Imaratex portal, but it's very important that you keep a check on any updates which are coming, which are relevant to you, such as Foreign Licensing Issuing Authority. So in case you have registered in the past, you may have selected the license issuing authority as your main entity or some other entity. So please ensure that you update it to the Foreign License Issuing Authority if your business owner is a foreign company. So this is mainly on the registration part, the practical issues and all. Now, once we are registered for corporate taxes, like many companies have already applied, received the TRN, then there is a lot of compliance which is required to ensure that we don't incur any fines, any penalties, and our accounts and everything are in check. So when we talk about the compliances, the first thing as chartered accountants we think about is accounting standards, the methods of accounting, audits. Are audits compulsory or not in the UAE right now? So firstly, when we talk about the accounting standards, until now, many companies were maybe not even preparing the financial statements because they are dormant entities or not having substantial transactions. Or if they were preparing, some of the companies that I had seen, they were preparing their financials as per US GAAP, maybe because their holding companies in US, they have to consolidate, so you prepare financials as per US GAAP, or maybe as per Ind AS to facilitate consolidation with your parent entities. But now, from corporate tax era, it is now mandatory for all taxable persons to apply to follow IFRS to prepare their financial statements. So in case you have been following a different accounting standard such as US GAAP or Ind AS, you need to ensure that you prepare a bridge accounts and your financial statements are prepared as per IFRS for tax purposes. And this is very relevant even from a last year perspective. So if you have, let's say, already prepared financials which will translate into opening balances for your tax year, please ensure that these are in line with the IFRS. However, there is an exception for SMEs which have a revenue of less than 50 million that they can apply IFRS for SMEs. When we talk about accounting methods, as a general rule, accrual basis of accounting has to be followed. However, in certain exceptional situations, cash basis of accounting may be allowed by the FTA. Last but not the least, audit of financial statements. As chartered accountants, as auditors, audit is paramount importance. So audit has been made mandatory by the UAE corporate tax law for two categories of taxpayers. First is the taxpayers who are earning a revenue of more than 50 million dirham in the financial year or in the tax year. It is mandatory to get your accounts audited. And the word I'm using here is a taxable person. So for instance, if you have applied for a group tax registration, individually, let's say there are two entities, both have a revenue of, let's say, 40 million each. So they are not liable to get audited mandatory. But when you form a tax group and your consolidated revenue exceeds the 50 million threshold, you will need to get the accounts for the tax group audited. It's a mandatory requirement. You need to prepare and maintain these documents. Then for qualifying free zone persons who are going to avail the free zone incentives, which Mr. Manu will speak in detail, it is a mandatory requirement to get your financial statements audited. Then we talk about the corporate tax return quickly. So corporate tax returns are due to be submitted within 9 months from end of the financial year. So for companies which have the financial year starting from Jan to December, calendar year, your tax return will be due to be submitted by 30th of September 2025 to the FTA. So you have 9 months to get your accounts in order. If you're required to be audited, prepare audited financial statements, get yourself audited, do tax provisioning. So you will have a 9-month period. Now to keep the records, any companies which are registered have to submit the UAE corporate tax return. So you may be claiming the 0% free zone tax incentive. You may be availing a small business relief. You may be availing any other relief. You don't have any revenues. Irrespective of any criteria, if you are registered for corporate tax, you need to submit a corporate tax return every year. There are certain entities, however, which are exempt from return filing, who may be exempt from return filing, and only a declaration may suffice in case of certain exempt entities. Now, there have been companies which have been preparing historically financials in a foreign currency, again to align with their parent companies or group companies. But for corporate tax purposes, similar to VAT, it is mandatory required to convert the amounts into AED using the exchange rates published by the Central Bank of UAE on the date of transaction. In terms of the return filing, there have been different templates. So there have been a separate tax return form when you deregister the company and it's the final return. There may be different forms for the companies which will be availing for the small business relief, a more simplified form. However, normally your tax return form will request you to fill certain basic details. First of one would be the taxpayer details, your name, TRN, which may be auto-populated. Then you will have different elections scheduled. If you're electing for any small business relief, any other relief, foreign P exemption, any exemption that you are claiming to compute the income, any kind of adjustments you are making with your related party and connected persons, if you are not following the transfer pricing, any TP adjustments that you need to make in the tax return, any transfer of tax losses that you are doing to your group company under the corporate tax law, any tax losses that you have and you are carrying it forward to the next years. So all these information, including your foreign tax credits, your withholding tax credits, your tax liability, would definitely form part of your corporate tax return. So please ensure that you have these things available with you, and your system should be aligned to give you the information required for any non-deductible expenses easily, so you don't have to spend a lot of time segregating the deductible expenses versus non-deductible expenses while filing the tax return. Now, when we talk about record keeping, so record keeping is very essential because corporate tax is also a self-assessment tax. So FTA is expecting that the companies are complying with the law, you are filing your tax returns correctly, you are doing the necessary compliance. But from time to time, they may come and knock on your door and issue you an audit notice that, okay, please validate the returns that you have submitted. Please confirm what is the basis of claiming an exemption or a tax holiday for free zones. So you need to maintain certain records under the corporate tax law. The basic records will include your financial statements, sales and purchase register. If you're claiming any foreign tax credits, if you have paid any taxes in a foreign country, you need to have, let's say, a withholding tax certificate from that foreign country that, okay, you have actually paid those taxes there. So your records will be required to be kept, any kind of agreements, contracts with your group companies, third parties, transfer pricing study, benchmarking reports. So all these documents would be a first line of defense whenever there is an audit by the FTA. As we have seen in the case of VAT also, if your documentation is robust, you have less chances of penalty if you have done everything correct and you have relevant documents to substantiate that. Now, records can be maintained in English or Arabic, similar to the VAT law. However, if the FTA requests, you need to provide them the translated Arabic copies of the documents. And documents could be stored in a physical form or an electronic form on the computers. In terms of the retention period under corporate tax law has increased to 7 years from the normal 5 or 15 years what we have been seeing in the VAT law earlier. So the document retention period has increased. And if you are a free zone person, you need to maintain transfer pricing documentation, audited financial statements to justify your free zone status and any exemptions if you are claiming. Now this slide, I'll just keep it here. I would not speak much about it because we don't want anyone to incur penalties. But to ensure compliances, to encourage compliances, there is a provision to penalize the taxpayer for any non-compliance done. Like late registration penalty is 10,000. So if someone has not applied for registration within the timeline, they may face a fine of 10,000. Similarly, there are other penalties for late return filing, late payment of taxes, and so on and so forth. So please ensure that you are complying with the tax law, you are taking registration seriously, you are doing the required compliance, maintaining the records, maintaining the financial statements, so that you don't have to look at this slide ever. So thank you so much. That's it from...
Superb, Pratik. I didn't even have to give a big round of applause. It was naturally a big round of applause. Super, well done. Thank you, CA Pratik, for such an informative session, and especially covering all the compliances, the deadline in a short period of time. It is not easy. Thank you so much. Now I'd like to request our chairman, vice chairman, and our treasurer to join me on the stage, along with Venkatesh sir. Please, if you can also join on the stage for giving a memento on behalf of all of us for doing such a great session for us. Thank you. Great session. Now, before we go to our next session, can I have a raise of hands on this question? How many among us have read the free zone guide that was issued? How many? Not a great number. I'm sure you all agree with me that this is one of the most awaited guides on corporate tax, and with around 135 pages, so not a simple one to read through. Our next speaker on this topic is going to cover this topic particularly. Is our very popular CA Manu, who is a CEO and founding partner of Emirates Chartered Accountants Group. He is going to open this magic book for us to understand what truly is free in the free zone. To do his formal introduction, I'd like to request our magnetic ExCom member, CA Ashna, onto the stage. Please welcome her to the stage for doing the introduction for CA Manu. CA Ashna. Big round of applause for her, please.
Good morning. Oh, you're all awake. Fine. The juiciest topic, free zones. With taxes coming in UAE, we actually realized what the government was trying to create when they actually came up with the free zones law. How many of y'all have companies in free zones and transacting with mainland? I think most of them. See a lot of hands here. But are y'all really allowed to do that? Why is this question of substance coming? Why are we highlighting on creating documents? When we create a company, aren't we supposed to consider all these points, whether we are taxable or not? We have to be compliant. For me, free zone can be summarized in just 4 letters with the word site. What is the extension of the word site? S. Any guesses here? S for substance. I for, yes, income from qualifying activities. T for, oh, my favorite, transfer pricing. And E stands for excluded activity. If you remember this word, you are done with the free zone concept. But today's stage is with Mr. Manohar, whom we fondly called as Manu. He is a practicing chartered accountant since 2005 and a founder member of Emirates Chartered Accountants Group. He's passionate about knowledge sharing on various platforms and podiums, and we reach out to him when it comes to free zones. Without taking much of your time, let us put our hands together and welcome Mr. Manu.
Good morning, everyone. Good morning. I thought Ashna would be completing all the discussion about the free zone. Then she gave the shortcut site. So let me check anything left out there or not. Around 10 days back, I think the free zones guide is released. It was released on, or we came to know about it on 20th of May, the site. Almost every one of you might have gone through the guide, or some of you might not have gone through. But what we are going to learn today, all the companies in the UAE registered in free zones for getting the benefits, tax benefits in long term. Really something is there as free in free zone. That's what we are going to look into in next 40 minutes. Yeah, I'm going to cover this 11 topics. So it will cover who's a qualifying free zone person, and then connecting with what is there in the new guide, our understanding what we understood earlier and what is new in guide. That's what we are going to discuss today in next 40 minutes. And some key takeaways from this guide. And then if any, some open issues still not resolved. What do you think? Everything in this guide, some of you, most of you might have gone through the guide. Whether your all issues are resolved? Still you need clarification? Yes or no? Yes. That is the speciality of tax. My friend Manoj, some years, 3-4 years back, he thought of starting practice here. Then he said, I started, and then he said, "Itna maja nahi aata hai idhar." So I am going back to India because here only debit and credit is some VAT, 5% VAT, who doesn't know it? But you now see, If you read the guide, earlier the law came. See how the path of free zone, a lot of stages, even some of the regulations, they clarify the guidance, the ministerial decision and cabinet decision, they have withdrawn also, even within 1 year. So complication is there. In free zone, you see specifically in free zone. When we read the guide, more doubts. Guide is to clarify your doubt. See transfer pricing. See global minimum tax. So there are a lot of areas where you have enough to practice in the UAE. That's how our chief guest said, the people who are happy in seeing this regulation is chartered accountants or CPAs. So some of you are business owners, you may not be happy because you are making money, so you don't want to pay tax. Others, consultants, advisory, a lot of job opportunities in the UAE. Going forward, I would like to just to give you a brief or a thought process, who is a qualifying free zone person? Let us start from there. It's already discussed, everybody knows. Who's a qualifying free zone person? What is the basic condition? What is the basic condition? It should be a free zone person. So who's a free zone person? An entity registered in a free zone or branch of a mainland entity or branch of a foreign entity, and who satisfy the additional conditions that is mentioned in the Article 18(1) of the tax law, that is 47 of the UAE corporate tax law. If you satisfy all those conditions, you will be eligible to be considered as a qualifying free zone person. But now, when we read the guide, another point. First, you should know who are you, whether you might have registered in any of the free zone. You might be thinking that you are a free zone. Media city, textile city, wholesale city, logistics city, humanitarian city, healthcare city, many cities are there. You might have registered in any one of the cities. Are you a free zone person? Ask your authority. As per the guide, you should check with your authority whether you are a free zone person or not. So this is the first point we should understand, we should get. Before going ahead, check back. The regulation came 1 year, 1.5 years back, applicable 365 days back onwards. Now you have to go back and check whether you are eligible or not, whether you are a free zone person or not. Once you check that one, if you are registered in a free zone person, whether it's a designated zone or non-designated zone, 4 conditions to be satisfied to be considered as a qualifying free zone person. Number 1, you should maintain adequate substance. What is adequate substance? More clarity is given in the regulation. You should operate the core income generating activity in the free zone itself. Number 2, you should have adequate qualified full-time employees. You should incur operating expenditure in the free zone itself. You should have sufficient assets. So the substance, we have got more clarity is given. So in another slide, I will be covering in detail what is substance, how to maintain a substance in the free zone. Number 2, you should comply with the transfer pricing guidelines. Number 3, you should do the audit of your financial statement every year. And number 4, you should generate qualifying income, and even if you generate some other income which is not a qualifying income, it should be within de minimis criteria. So I hope everybody knows there is a fair understanding about de minimis criteria. That means even if you generate non-qualifying income, if that income is not more than 5% of your total turnover, or 5 million, whichever is lower. So if you satisfy all those conditions, you will be eligible to be considered as a qualifying free zone person. Whether every free zone person is ready by now, we have to keep the substance. Whether every free zone is ready to be considered as a qualifying free zone, we have to check. If you do not comply with any one of the regulations from the day, any one of the conditions from the day one, then current year and next 4 years, you are not eligible to be considered as a qualifying free zone person. Voluntarily, if you elect this year 2024 to be considered as a normal taxable person, again, you are going to lose 5 years. Next election you can make only in 2029. Today is the last date of election. Next election you can make only in 2029. Are you a qualifying free zone person? Election result will come now if you check. Now, what is qualifying income? Broadly, if you are a free zone person, if you feel that, if you think that you are satisfying all the conditions, like you registered in a free zone person, where you registered as a free zone person, it's a free zone authority, confirm that you are a free zone person. Number two, you think that you are maintaining adequate substance. Number three, ready to do the audit. And number four, complying the transfer pricing regulation. If you satisfy all this, then you have to think, what is your nature of income? To decide whether it's a qualifying income, you should know to whom you are dealing with. With whom you can deal. Either you can deal with the free zone customers, or you can deal with non-free zone customers. Non-free zone customers includes mainland companies, mainland entities, natural persons like me and you, and companies located outside UAE. So these are the two categories, only two categories. If you are dealing with a free zone person, only your customers are free zone persons, then only 5 items are excluded. All other items are qualifying activity. So check whether if your customer is only free zone persons, if you are satisfying only, if you are not doing any one of the 5 excluded activities, then you are eligible to be considered as a qualifying free zone person. Go to the other end. If you are dealing with a non-free zone person, that means with the mainland or overseas, if you are doing or if you are conducting 13 activities, they are called qualifying activities. If you are doing only or conducting only 13 activities, you are eligible to be considered as a qualifying free zone person. In the mainland, if your customer is a free zone, don't do 5 activities. If your customer is a other than free zone person, you can do 13 qualifying activities plus ancillary activities. In case any one of this exceeding non-qualifying activity also, non-qualifying income also generated, check the de minimis criteria. That's what I mentioned, 5% of 5 million, whichever is lower. So that is the broader picture. This must be understood from the previous guides itself, previous cabinet decisions and ministerial decisions in the same floor we discussed already. Now, we are going a little more in depth. What are the new updates in this new guide? Substance. It's very important, very interesting as well. We have to maintain adequate substance. Steps to determine whether a free zone person is maintaining an adequate substance. Check or identify as a first step, identify what's your core income generating activity. If you are a free zone person, and if you are not falling under generating a core income generating activity which is coming under qualifying income, then you need not maintain substance. Even you can work from mainland as well. Check, identify what is your core income generating activity. Identify the assets deployed. people employed, and the cost you are incurring, identify it for doing that core income generating activity. And number 3, evaluate the adequacy and consistency, whether assets, employees, and operational cost is consistent with the nature, size, and revenue of the activity. Should check. If you follow these 3 steps, then you can establish whether you are maintaining adequate substance. Some key points. Number 1, separate substance as required for each core income generating activity. If you have multiple core income generating activity, like a treasury and financial services, as well as if you are in the wealth advisory or into trading, wholesale trading, you should maintain substance separately. So employees should be, or separate team should be, the expense should be incurred for specific core income generating activity. Assets, if applicable, has to be maintained for that. So you should maintain the substance separately for each core income generating activity, and that we had to establish while filing the return. And otherwise, we had to maintain the document definitely for that. Double counting of employees for the same purpose, same substance is not allowed. Should have proper documentation, specific employees for specific core income generating activities. Number 3, non-core income generating activity can be conducted outside free zone. So very interesting. Here tax planning comes. Even if you are a free zone person, doing core income generating activity which is eligible to be considered as a qualifying income, if you are doing other than qualifying income, conduct in mainland. Doesn't matter. More clarity came. SIGA can be outsourced, core income generating can be outsourced to free zone person, but adequate supervision has to be there. It's very important. Just outsource it, tell your friend to manage it, and you go back and sit at home. Doesn't work. Or if you go back to mainland and work, or if you go back to India and work from there, won't work. You should maintain adequate substance with all other requirements. I'll go through that, what are the other requirements. With some examples, if I give, it will be more clear for you. And the last point in this case, okay, that was the last point. Some illustrations. It will give you a picture. A distribution activity, that means a wholesale trading company having 100 employees. Out of that, 20 people are sitting, directors and managers are sitting in JAVSA. But strategic decisions are being taken from their JAVSA, designated free zone, but others are working from outside. Is it adequate substance maintained? Yes. Guide said. They gave 520. I just changed the number. So we can connect. Second point, a distribution company. Distribution activity is applicable only for designated free zone company. A distribution company is registered in normal free zone, for example, DMCC, and has a warehouse in JAVSA, designated free zone. SIGA is in free zone. Then does it maintain adequate substance to get eligibility of qualifying free zone person? No. I'll explain it once again. DMCC company, but warehouse in JAVSA to do the operations of IC sale. As long as it has substances in the main, in the free zone, you cannot. It will not be eligible to be considered as a qualifying free zone person. Number 3, a fund management company in free zone merely executes decisions taken by its foreign company. So decisions are taken from foreign, and you are executing it. You are not maintaining substance. Number 4, a free zone company, a regional headquarters wherein senior employees operate in the free zone, but they move to mainland or advisory service to outside and all, but headquarter activity, senior employees are in free zone. Does it maintain substance in free zone? Yes, it maintains substance. 2 more points. Free zone undertaking a holding of shares and other securities, no employees, board decisions are taken in the free zone. Still, even though no employees, in this activity, you are eligible to be considered as a qualifying free zone person. Because for, even you might have read in economic substance regulation also, employees are not required for doing the qualifying, holding of shares and other security services. The last point, free zone having domestic PE. Free zone having domestic PE where sales are through that PE and only day-to-day business in free zone. I'll explain it. A free zone company which is having a PE. PE can be generated either by branch or your presence in mainland. You're doing activity in mainland and sales is conducted from mainland. Only day-to-day activity or business is done in the free zone. You are not eligible to be considered as a free zone person. It's because you are not maintaining substance. So these are the areas where we had to advise the client properly, not from today, but from January 1st or June 1st last year. If they are not maintaining it, we'll see it 2029. So adequacy of substance, we touched broadly. Now going forward, free zone parent and domestic PE or foreign PE. So everybody knows PE. I'll just give you a brief what is PE, but you might have heard of a PE, and in the previous guide itself for the ministerial decision. Here, the new point in this, I would like to highlight, who's the parent, which is the PE or domestic PE, which is the foreign PE connected to that. So it's very interesting point. Scenario 1. You have a mainland head office and you have a foreign branch. Scenario 2, you have foreign head office and free zone branch. And third scenarios, you have head office in free zone, but mainland, you have branch and foreign branch. This three scenario for the corporate for the free zone corporate tax purpose. The free zone head office called as free zone parent, and the branch domestic PE as well as foreign PE. That's clear. Second point, a foreign head office is there, and free zone branch will be considered as free zone parent for the taxation purpose here. Very interesting third one. First scenario here, mainland head office, and you have a branch. Branch will be called as a parent, and head office will be called as a PE for the free zone tax purpose. It's only the terminology they used because the PE concept, they want to bring the taxation from the free zone angle. Whether you are dealing with a PE, then you have to maintain arm's length principles and other requirements. So for that terminology purpose, they brought even the return form if it comes, head office in mainland and then branch in free zone, and the declaration of the documents, if it's necessary, if it's the form comes like that, then the free zone branch will be known as free zone parent, and head office will be known as PE, domestic PE. Very interesting connecting with this one. I thought of sharing this point. Mainland ABC company, LLC, is into distribution, wholesale activity. They formed a mainland head office and foreign branch. Free zone, nothing. So this is the scenario now. They are not a qualifying free zone person because it's a mainland. Next year in 2025, they got some high sea sales. If they form a company, a branch in designated zone, will it be eligible to be considered as a qualifying free zone person subject to all other conditions? Only high sea sale, if I conduct by opening a branch in free zone, hope it is only tax planning, it's eligible to be considered as a qualifying free zone person subject to the substance, subject to the other conditions, all the other four conditions as well. That's why I'm still thinking Manoj will be feeling very sad now. A lot of opportunity to advise the client, or client might have missed these opportunities because the law came last year. And we came to know about this decisions, or the authority released this guide only just now. Other point, qualifying free zone person creates a domestic PE if it has a fixed or permanent place in the mainland, or a dependent agent in the mainland. If you are a free zone person, and if you keep even a dependent agent for doing your mainland activity, then it will be creating a PE. So you can retain the substance in the free zone for the core income generating activity you are doing in free zone. Keep the PE in mainland only for the domestic purpose. Domestic business you will be doing in that PE. It need not be always branch itself. But you can open a branch. Just having a license will not help, but it should not be a preparatory or auxiliary in nature. You should have activity there. Then only it will be considered as a PE. These are the areas, again, we can look into and advise the client, or you can do yourself wherever the possibility is there to structure by optimizing the taxation. These are some additional points. I'll just pass through this. PE, so revenue attributable to domestic PE, the revenue of a domestic PE and then foreign PE. So revenue attributable to that PE which has to be looked into. So I'm just passing through designated zone company, free zone company, that is a parent, whether a branch or head office, and any domestic or foreign PE, the transaction has to be at arm's length. Allocation of expenses, one of the key element here. If you have multiple activities in free zone, core income generating activity, you have to keep the expenses, assets, and everything separately. And if you have a PE in mainland or overseas, for that, you have to keep separate documents. For that one, expenses has to be accounted separately. So this is one of the challenges, practical difficulties in maintaining this document separately. Startups. Startups also, there is something free. What is startup speciality? One of the basic conditions to be considered as a qualifying free zone person is that you should generate qualifying income. In the first year, I just formed the license, but I did not generate any income. What will happen in that case? It does not generate any income the first year or second year itself. So basically, will we lose the first 5 years? When we read the law, we will lose it. But the guide gave a clarity that it is eligible to be considered as a qualifying free zone person, provided you do not generate any other income. Qualifying income, anyway, you are not generating. Don't generate any other income for the first year, or whatever, specific years. A smart manager, anyway, they bought some furniture, and then they don't have any business. One employee took one furniture, said that, okay, we will bill you. Anyway, free zone, small amount, no need to register for VAT, small transaction. Invoice kiya. Only because of this, only for this 100 dirhams, he will be losing 5 years. Because it is a non-qualifying income, sold to a natural person in the free zone. So we cannot, we will check whether it is coming, this non-qualifying income is coming within the de minimis criteria. De minimis criteria should be 5% of the total turnover. It's not it's 100% of total turnover, lost for 5 years. Another smart manager, thoda surplus money hai, so that amount they deposited in the bank account. Anyway, business will start next year, earned income. What will happen to this? This is how I did little research. Earlier also I was having confusion. This income, interest income, whether when we earn interest from bank, whether it is the service we are giving to bank or bank is giving to us. If bank is giving service, why bank is paying interest to us? So this was the overall confusion. So I thought that I was doing little research and then later came to know when we read this law, has to be considered that if you are earning interest, it has to be considered it's a qualifying activity of treasury and financial services to a related party. Who is that related party? Me. It is called Tattvamasi. So I went even to Somaveda and then found that Tattvamasi, when you are doing service to you, you are related to you, so it's a qualifying treasury and financing services. So go and check if any license you are holding in free zone, not doing any activity, planning to do in future, check your bank statement for 1 year, whether 5 dirham, 2 dirhams already interest is credited to your account, next 5 years is lost. Next point, tax losses. The tax losses, if any tax losses incurred by a qualifying free zone person for the non-qualifying income, that is taxable income, taxable category, they can carry forward and set off only for that. If any losses incurred in the qualifying activity, you cannot set off those losses against taxable income. And then losses related to qualifying income cannot be used to offset taxable income transferred or carry forward. So tax loss also, you can specifically for that category, you can set off. And the qualifying activity, qualifying income, if you incurred a loss, it cannot be set off against the taxable income. Qualifying income if a customer is a free zone person. So I have to speed up. What are the list of, earlier I said, if you are dealing with a customer who is a free zone person, 5 categories are there. Banking, insurance, financing and leasing activity, immovable property specifically, and then you are dealing with a natural person of specific 4 categories, then that is excluded activity. I'm not going in detail on this topic, but only one point you have to keep in mind. When you do a business in free zone, check your customer who is the beneficial recipient. You should not be a pass-through of sales or supply of services. The customer in the free zone should be a beneficial recipient. What you have to do for that? You should get a written statement or undertaking from the purchaser of goods or your recipient of service. So now, for me, my tax effective date is 1st January 2024. I didn't know about it, that I have to get a return confirmation. This is an example or the guidance given in the guidance. So how I can prove that my recipient of service is not passing that one. He is a real recipient, a real beneficial recipient. For that, I have to get a confirmation. This document has to be maintained. If this guide was issued in last year, many customers would have kept this document and ready. Now, can we go back to customer and say that on the January 31st, what I know is, can you confirm a return confirmation that you only ate that one, you didn't pass through? Practical difficulty is there. Qualifying income if a customer is a non-free zone person. There are 13 plus 1 activities. 13, definitely we know what are the qualifying activities. Manufacturing, processing, trading of qualifying commodities, distribution of goods, all this. Plus ancillary activity. Why I am giving ancillary activity stress as considered as a 14th point? Because there are a lot of areas where we can, a lot of additional information we got from the guide. That's why a 14th point I've given, and then I would like to highlight the ancillary activity first. What is ancillary activity? Ancillary activity shall be considered as a qualifying activity when either it is necessary for the performance of the main activity, or either it is necessary to perform the main activity, or the contribution to the main activity is minor in financial terms, and it is closely related to main activity. It should be closely related to main activity. There's 2 conditions. Either it has necessary to perform, or the financial contribution is less and it is closely connected. Either of this. We'll go through some examples. If an ancillary activity only conducted without a main activity, then it will not be considered as a qualifying activity. What is distribution activity? This is interesting, right? So, what is distribution activity? Buying and selling of goods should be there, should be tangible or movable goods, and importation, storage, inventory management, handling, transportation, or exportation of those goods is not a mandatory, it may include. So, buying and selling is mandatory. So, that's a key point. Now, 7 points. If qualifying distribution activity, if a distribution activity has to be considered as a qualifying distribution activity, number one, it should be conducted only from a designated zone. Customer should be an end user. Number three, conduct in or from a designated zone. Number four, goods are tangible or movable in nature. Free zone holds the title of the goods. Free zone person holds the title of the goods. Should not be an agent. It should hold title of goods. Buying and selling should happen. It implies change in location of the goods. That also there in the guide. There should be a movement of goods. Implies, the distribution implies a movement of the goods. And last point is, a customer should sell or resell. These are the conditions. And now we will go through some of the practical issues after discussing the end user, who is an end user. And how, what documentation we had to confirm, we had to maintain for confirming the customer is an end user. Number one, it uses, who's an end user? The end user is the person who eventually uses the products for its intended purpose, whether may be personal, commercial, or industrial in nature. If they use it for their own purpose, or any one of the individual purchase it for consumption, if the company purchases it for consumption, it cannot be considered as an end user. So the distribution activity, when we sell the product, it should be for resell or process and resell. How we can confirm? In undertaking KYC, now also the KYC is important here. Check your customer, maintain the documents, in undertaking a contract to ensure that the customer is the end user. This documentation is required from June 1st, 2023. The challenges. To what extent KYC we had to do, due diligence we had to do, and then how to get a clarification or undertaking now for the backdated documents, and whether that is sufficient or not, and then implementation challenge because of this, because of the effective date. This is a practical issue now. Going forward, I would like to discuss 5 scenarios of qualifying free zone person who was doing distribution activity. Number 1, high sea sale. Number 2, import of goods. Number 3, export of goods. Number 4, sale in the mainland. Number 5, sales agent. Trading, importing goods from India, by a designated free zone company, JAFSA company. Goods are moving directly to overseas outside the UAE. In the guide, they have given an example and clarified that it is eligible to be considered as a qualifying free zone person, provided all other conditions are met. Substance has to be maintained. It should be used for resale. Goods should be used for resale, so all other conditions should be maintained. This was not clear in the previous ministerial decision, but in the guide it is clear now. Number 2, import. If you import goods from overseas through a designated zone, then sell to the mainland, you are eligible to be considered as a qualifying free zone person, subject to other conditions. Export. If you buy from mainland, goods need not pass through designated zone. It can go from mainland to anywhere through road or by way of road or any other mode. But it has to be, all other conditions to be maintained, like a substance, all other conditions to be maintained by designated free zone company, you are eligible to be considered as a qualifying free zone person. And very surprised to see the fourth point also. Trading in mainland. What I read it like this. If you are a designated free zone company, buying goods from mainland, selling goods in mainland, from wherever the goods came, whether it is manufactured or it is imported by someone, you are eligible to be considered as a qualifying free zone person. If really it works, if that is the intention of the law, don't you think that a lot of companies will work smartly? Any trading happening from Dubai to Dera? Next point. I'm not giving any hint. Sales agent. If you are working, if you do not hold the title of the goods, who's a sales agent, without being involved in actual buying and selling of the goods, physically activity, the sales agent does not include. In that case, it cannot be considered as a qualifying free zone activity, qualifying income. The reason is that we do not hold the title of the goods. Buying and selling is not happening. So intending sales agent and then any sales agent, this way we cannot structure it. Don't look for that real buy and sales to be happened. Manufacturing and processing. I want to highlight only one point in manufacturing and processing. That's what I was looking for from the guide. Here, types of manufacturing, contract manufacturing is there, toll manufacturing is there, or even full-fledged manufacturing is there. Toll manufacturing or contract manufacturing is based on the contract with the third party. For a supply, for the customer, we are making it, but third one is the full-fledged manufacturing. As a manufacturer, I keep the goods and sell it. Here in the previous public consultation documents, it was mentioned that if you are doing manufacturing activity, then distribution activity, you should split. You should keep manufacturing activity only in any free zone, but distribution activity has to be in the designated zone. So my question is, a company in a free zone, for example, textile city, doing manufacturing activity and selling the products, eligible to be considered as a qualifying free zone person or not? Yes, my understanding in this, from the guide I have taken like this, qualifying activities are manufacturing activity means production, planning, or processing or quality control. Ancillary activities, post-sales activities, and customer support. A manufacturing company, post-sale activity is an ancillary activity, then definitely sales also should be ancillary activity. It should be qualifying activity. If you keep that activity separately, then it should be done from the designated zone. Manufacturing and sales. Why we are manufacturing only for sales, for what else? So it is a part of it, and then I take a stand that if it is one and the same, then you are eligible for the qualifying activity. It can be considered as a qualifying activity. Logistic services, I have 5 more minutes, right? Logistics, yeah, I can cover whatever I brought. The point to talk, I can cover in 5 to 7 minutes. Logistic services, we covered earlier as only one point, particularly what is addition. What I took from the guide is only one point. They gave what is logistic services, and one example they have given, last mile delivery. So we should not be very smart to move a mainland company to free zone and conduct all mainland activity by sitting there. It's mentioned here the last mile delivery can be in the mainland or in outside. That means the distribution activity, logistics activity has to be done from free zone itself, can be designated free zone or normal free zone, but last mile deliveries in specifically mentioned, you should not shift your mainland activity of your local distribution to free zone and go and sit there, let a driver run in the mainland, will not work out. In the case of logistics services, if you are working if you are in a designated zone or the normal free zone, except the service you are giving to a natural person, everything will be eligible for 0%. Headquarter services, the key element is that even though headquarter services include incurring operating expenditure on behalf of group entities, coordination of group activities, financial management, central procurement services, HR services, technical support, all these are headquarter services. So, but you should not take, if you have a PE in free zone, and if you are doing this kind of services to your mainland, like HR services, IT support, don't take it as a qualifying activity. That's my view on it, because the basic requirement of basic condition of a headquarter activity, the senior management, headquarter activity, that activity we should respect. Since these are activities which is included in the headquarter, we should not do only that activity, then the essence of the law will be lost. The last activity, trading of qualifying commodities under this 13 qualifying activity. Last activity I would like to discuss is trading of qualifying commodities. So more clarity came, but still some more points yet to be clarified. Trading of metal, mineral, energy, and agricultural commodities in raw form. Physical trading or derivative trading also can be considered. And the raw form, it gave little more clarity, but further clarity is required for us. And then ancillary activity even includes the warehousing services or delivery services. So if you have any doubt, we have to refer HSN code to ensure that this is in a raw form and available in the commodities exchange. This is very interesting. Immovable property, very interesting. I got a new point in this immovable property. You are a free zone person. You have a commercial property in free zone. You are giving it to a free zone person itself. He is the beneficial recipient. A free zone company is having a property in free zone and customer is also a free zone. Lease to a free zone person, you are eligible to be considered as a qualifying, it can be considered as a qualifying income. Suppose you lease this property to another free zone person, he is not a beneficial recipient, it's not a qualifying income. It will be taxable income. And it cannot be considered for de minimis requirement. Number 3, am I okay? You are following? Yeah. Free zone person having a non-commercial property, residential property, any person if you lease out, property is in free zone, you are leasing to anyone, it is not a qualifying income, it is taxable income. We cannot check the de minimis, it is not coming under de minimis criteria. Suppose the property is in mainland, this is very interesting. Suppose the property is in mainland or in foreign. There are free zone companies which can hold in freehold property. It just may not be in mainland, may not be in free zone. So it's a mainland property held by a free zone company. Any immovable property, whether it is residential or commercial, any person you are giving, in that case, it is taxable income, excluded activity subject to de minimis criteria. So if your property is in mainland, it can be considered as, anyway it is a taxable income, but it is eligible to be considered for the de minimis criteria. Something new in this. What is that? With this example, next example. Suppose I have a property in mainland, owned by a free zone person, me, and I am earning income from lease. Case 1, if no domestic PE is created, Non-qualifying income subject to de minimis if my property in mainland has a PE. How to create a PE? You can have a license or even by registered agent, dependent agent, different ways are there to create a PE. If PE is created, then this will be taxable income, but eligible to be considered as a de minimis criteria. No, it is not eligible for de minimis criteria, sorry. It cannot be considered as for de minimis criteria. So if you have property in mainland, only because of that, if you are losing entire 5 years, the rest you can take a call. Mixed, can I move? So just to summarize, in case if any one of you didn't get the point, if you have a mainland property in the name of free zone, in one case, if you are having a PE in mainland, then it will be taxable only in the PE. It will not come for a de minimis criteria. Otherwise, if you are booking only in the designated zone or free zone book, or they're considering us against as a non-qualifying income, it has to go for de minimis check. If in de minimis check, if it is more than 5%, your entire income will be taxable for 5 years. Hotel building, mixed unit. In the guide, it is said that in a hotel, retail outlets and restaurants are commercial units. Rooms and conference are non-commercial units. That's how it became complicated. How we can split it? You can split it, otherwise declare everything as taxable. If something you want to look into, we can look into to split and then identify and charge accordingly. Top 15 takeaways in 2 minutes. From this discussion, I picked 15 points. 1, check with your authority whether you are a free zone person. 5 years block is confirmed. You're clear, I'm going this fast to recollect whatever I said, whatever I got from the guide, just a wrap up summary. Check with your authority whether you are a free zone person. We confirmed that whether you are going for election or you are failing in election, in both cases, you are losing 5 years. Separate substance has to be maintained for each core income generating activity. Free zone parent concept, a new concept. And surplus fund, if you deposit in the bank and earn interest of nominal amount, of course, it is already discussed, is the self-service, qualifying income. So if you have surplus fund in the mainland company, you are planning to deposit in free zone. Beneficial recipient, cleared, documentation, distribution activity, KYC, so undertaking to confirm that it is not an end user, and then distribution activity of high sea sale confirmed, distribution activity of export of goods, local sales, again clarified, then the distribution activity, the distributor should hold the title, and 11th point is logistics services, last mile, key point, non-core income generating activity can be outside free zone, still eligible for qualifying free zone person. Transfer pricing, definitely between the designated parent or the free zone parent and then domestic PE or free zone PE has to be maintained. And separate financial statement not required, but documentation has to be maintained for core income generating activity separately. And the last point, manufacturing and process, post-sales activity can be an ancillary activity. Wrapped up? And some open issue in 1 minute. What I need is little more clarity on end user. List of free zones. We want to get the list of free zones. Minister will release it. Let us wait for it. Mixed units, complicated. Need more clarity. Practical difficulties there. Raw form of the qualifying commodities. Substance. How many employees, whether you can work in more than one activity or multiple supervision of the outsourcing activity related. distribution in designated zone doing local sales. It's clear in the law said, but I'm not comfortable with that one. The chance of tax evasion is very high in that. Hope it is the closed room. Distribution activity, the supplier is the manufacturer or importer. That distribution activity, the supplier is manufacturer or importer. Yeah, this is one point I would like to highlight. Everywhere in the guide it is mentioned that you should supply the goods which your the importer, here everywhere it is mentioned that it has to be a manufacturer or importer. If you are buying from a mainland, from a manufacturer or importer, goods can either import or manufacture. Who has to import is not mentioned. Whether I have to buy it from the first importer is not clear. I don't know whether later they will come with that point. Then in that case, how we can have the documentation? Can we ask the supplier that where is your import document for me to book my tax? Not possible. So I accept that anyone, the goods in mainland, subject to other conditions, it's eligible. But it's our open issues. That's end of my session. Thank you so much.
Thank you, Manu. Such a great session. I'm sure people were waiting to rush out and take a break because free zone is not easy. Thank you for putting that effort for us. Appreciate it. Can I request our chairman, vice chairman, C. Ashna, and Hanumant ji to please join me on the stage to give a token of appreciation on behalf of us? Also, we want to take this moment for the book launch. So all the free zone has been summarized by Manu and the team, and Purvi Mehta has put a lot of efforts. Purvi, can we have you on the stage? Big round of applause for Purvi as well. She's working tirelessly with Manu to deliver a great book for all of us. And all the ex-com to join on the stage for the group picture, please.
Hello. Just to inform you that CA Manu and her colleague, his colleague Purvi Mehta has prepared a very informative book on UA corporate tax, Sinavas free zone persons, which we have just now inaugurated. So the copy is available on his desk. You may collect it. Thank you.
Let's move on to the next session. One of the big challenge dealing with complex subjects such as tax is its interpretation. I'm sure you all agree with me. Taxpayers always think from the view what best suits them. However, the authority thinks what suits the authorities better. Though all takes the interpretation from the tax law, but the interpretation may differ. And the ambiguity arises with open questions. No matter how hard we try, but it leads to some kind of disputes or matter that needs further clarity. We know there is a procedure to obtain private clarification from FTA, but then again, explaining the case in details in correct way is a challenge in itself, which is where tax experts play a pivotal role. To shed more light on this, on the correct procedures and processes in corporate tax to resolve disputes and differences, we have a very knowledgeable speaker with us, Mr. Shiraz Khan, who is the partner, head of taxation with Al Tamimi and Company. He's a UK qualified lawyer with over 25 years of international tax experience. Before I welcome him onto the stage, I'd like to request our ExCom member, CA Balram Vuchidi, to please join on the stage to do the formal introduction for Mr. Shiraz Khan. Give a big round of applause for Balram onto the stage.
Good morning, dear members. If necessity is the mother of invention, conflict is its father. So we have Mr. Siraj Khan with us to take us through how to handle the tax conflicts. Mr. Siraj Khan is a UK qualified lawyer with over 22 years of international tax experience. Prior to joining Al Tamimi and Company, he was the global head of tax at a leading multinational, where he was responsible for tax affairs in over 100 countries. He has also worked for a top international law firm in UK and Big Four firms in both in UK as well as Middle East. Shiraz specializes in advising on international tax structure and tax aspects of cross-border M&A, private equity, structured finance, Islamic finance, and real estate transactions. He has in-depth knowledge and expertise across all taxes, including corporate tax, withholding tax, and VAT in wide range of industry sectors. He has particular expertise in advising multinational corporations on structuring their investments and operations into the region and financial institutions, sovereign wealth funds, real estate investment companies, family offices, private equity group based in the region other than international investments. Shiraz regularly speaks at conferences and seminars on international tax issues and has been involved in advising governments on drafting tax laws. So, dear friends, please join me in welcoming Mr. Siraj Khan onto the stage.
Good morning, everyone. Before I begin, I wanted to ask you a question, and I just wanted to understand from you, how many of you think advising on tax is the role of an accountant? None of you. That's a surprise. Tax advisor? A few of you. Lawyer? That's useful. So a lot of you didn't express an opinion on this. The reality is, advising on tax is a role which is split. It depends really on the jurisdiction. In some jurisdictions, the tax practice or tax advisory role is regulated. In other jurisdictions, it's not regulated, so it's split. And of course, historically, you have lawyers involved in advising on tax because the entire tax is imposed under a law. And then you have accountants involved because once you file a tax return and you want to calculate your taxes, it's based on the financial statements. So therefore, normally in most countries where it's not regulated specifically, and in some countries you're required to advise on tax, you have to be a lawyer. In jurisdictions where it's not so regulated, the role is split between accountants and lawyers. And when I say lawyers, it's not just on the litigation side, but also the advisory side. So I guess the purpose of today's session is to focus on tax disputes, the process in the UAE, and just to give you some tips on the interpretation and application of legislation, and also how to navigate tax disputes. I think the first thing is that which you should be aware, and this is both for VAT and for corporate tax, the process starts once you register for tax. And after you register, you file a tax return. Once you file a tax return, that is considered a self-assessment. This is your own assessment of your own taxes as you see are applicable to you. And once you file your return and you've self-assessed your taxes, then the tax authority has a right to assess whether additional taxes may be applicable or not. And if they consider that additional taxes may be applicable, they have to go through a formal process of an assessment. And they may think that additional taxes should be payable by you because there's an error in your return. On the other hand, at that time, you may not know whether it's error or not. It may simply be a difference in interpretation. You may have taken a view, and later on it appears that the tax authority disagrees with your view. And as a result of that, and it's not necessarily an error which you can determine which is black and white, it's something which is open to interpretation, is not black and white, and it's a gray area. So this also gives the tax authority the right to issue an assessment. It's not that someone is right or wrong. And of course, it's not until the matter is referred to the courts that it goes through the appeals process and a final decision is issued that the court determines how this matter should be interpreted. So there is a process for the tax authority to issue an assessment, and it really depends. I mean, they have to issue assessment for tax and also for penalties. In the case of a tax assessment, once the tax authority issues an assessment, they have to notify you within 10 business days. And there are certain circumstances which are spelled out in the tax procedures law. Now, the tax procedures law deals with all the procedures which are applicable across all taxes, as you know, all federal taxes, including the procedures related to appeals, and then the special procedures in the individual laws. Nevertheless, in terms of when the tax authority could issue an assessment, the circumstances are if you fail to register within the time frame. The other circumstance, if you fail to submit a tax return. If you fail to pay your tax within the time period specified for corporate tax. And if you've submitted an incorrect return. And finally, if you've paid less tax than what you should have based on the law. And ultimately, this is, you're required to register based on the timeline which has been issued now. And of course, the filing of a tax return and the payment for corporate tax purposes in 9 months from the end of the tax period. In the case of a penalty assessment, the tax authority has to issue you the assessment within 5 business days, and they have to notify you within that period. Now, in the case that the tax authority, at the time they're going to issue the assessment, they believe that you haven't paid the right amount of taxes, and there's additional taxes due, but they don't have all the information to calculate the tax, they could actually issue an estimated assessment. And an estimated assessment broadly gives them very wide powers to issue potentially based on revenue, ignoring costs. So a number of measures can be taken. Of course, they're not specifically specified in the tax procedures law. Nevertheless, once this estimated assessment is issued, it gives a lot of discretion and freedom to the tax authority to assess as they deem necessary. And of course, at a later stage, if they have more specific information, they have the right to amend the assessment at that time. In the case of an estimated assessment, they have to notify you within 10 business days. Now, once the tax authority is issuing you an assessment, there are certain conditions it has to meet. And when I say tax assessment, I mean the formal tax assessment. So initially, when the tax authority has discussions with you or is asking you some queries in relation to your tax return, this is not a tax assessment. Also, when they undertake an inspection, this is not a tax assessment. Also, when they commence an audit, and even when they issue you a final audit report, this is not a tax assessment. Of course, you may become aware at a very early stage that a dispute is about to start because the tax authority is asking questions. They may have started an inspection, they've started an audit. Nevertheless, that is not an assessment. A formal assessment has to be issued in accordance with the tax procedures law, meeting certain requirements. And only at that time, is it considered that the tax authority is issuing an assessment. And the issuance of an assessment is critically important because the tax authority has some limitations. They have to issue an assessment within a certain period of time, and I'll come on to that in a short while. And the second thing which to be aware of is that also the clock starts ticking for dispute purposes once a formal assessment is issued. If you're having informal discussions, if they've indicated to you informally through an email that they may be subjecting you to additional tax, this is not a formal assessment. Now, the tax procedures law specifies the information which is required in order for the tax authority to issue a formal assessment. And generally, this information should be sufficient for the purpose of enabling the tax authority to determine the tax which is payable. And I think the other thing is that once an assessment is issued, it's actually considered as a debt payable to the tax authority at the time they notify you. And this is the case both for tax assessment and also a penalties assessment. In terms of the formal requirements for issuing a tax assessment, it's set out, as I said, in the tax procedures law, includes the name and address, tax registration number if applicable, tax assessment number, the type of tax, a summary of the details of the adjustments which the tax authority is proposing to make, and the reasons and basis of the assessment, the net tax due or refundable tax, and the date the due tax is payable, and the method through which it should be paid. Now, the question is often asked that if a tax authority issues an assessment and it doesn't meet all these requirements, does it invalidate the assessment? In practice, the courts, the approach they take, so unless the tax authority doesn't meet a lot of these requirements, it will generally be considered a valid assessment. And normally, sometimes the biggest scope for discussion or debate is the reasons and basis for the assessment. Sometimes these are not to the satisfaction of the taxpayer, and they may just refer to a particular legislative provision or something more general without giving details to enable the taxpayer to understand how the tax assessed was calculated, how it was computed, on what basis. And of course, the purpose of the tax assessment is to really enable the taxpayer to have certainty for the reasons it was imposed. So it's a right for you as a taxpayer to have the reasons, and it also enables you to better defend your position before the tax authority and the courts. But generally speaking, even if the reasons are general, the court will not invalidate the assessment. It will still be considered an invalid assessment, provided the tax authorities provided some kind of reasons or justification, however vague it may be. Also, for penalties assessment, there are certain details which are required, again, similar to a tax assessment: name and address, tax registration number, the applicable violation, and the tax procedures law sets out a number of violations, specific violations which are applicable. Some are applicable across all taxes. Then the VAT law and the corporate tax law also set out specific violations which are tax specific. And in the case of corporate tax law, these violations override similar violations which are specified in the tax procedures law. Also, it needs to include a summary including the amount of the penalty and the tax to which the penalty relates, as well as the total administrative penalty due. Now, coming on to the statute of limitations, as I said, the issuance of a formal assessment is very, very important for two reasons. First of all, the tax authorities have a time limit to issue the assessment, and secondly, it starts the process for disputes. Now, in terms of the time limit which the tax authority has to issue the assessments, it's generally based on the filing date of the return. The standard statute of limitation is 5 years from the end of the tax period. However, this standard limitation may vary depending on different circumstances. So in the event that you haven't filed your tax return, the statute of limitation extends from the standard limit of 5 years to 15 years. But it's from 15 years from the date you should have registered for tax purposes. In the case that the tax authority, for example, are undertaking an audit and they notify you of an audit within 5 years, this extends the statute of limitation by a further 4 years from the date of notification of the audit. So a lot of you may think that the tax authority only has 5 years to issue a tax assessment. That's not correct. They may extend this period by simply notifying you of an audit within the 5 years. And also in the case of a voluntary disclosure, if you're submitting the voluntary disclosure in the 5th year, the tax authority could extend the assessment. They could issue the assessment 1 year from the date of the submission of the voluntary disclosure. And this is, of course, to give the tax authority some additional time because you're submitting the voluntary disclosure very late, and the voluntary disclosure is the starting point of you disclosing to the tax authority the error which has led to the submission of the voluntary disclosure. And of course, there are certain other circumstances where the tax statute of limitation for tax assessments is extended, and one of them is also tax evasion. So in the case of tax evasion, and I'll come on to that in a short while, the statute of limitation is also extended to 15 years from the discovery or occurrence of the evasion. And this is common with all other jurisdictions. Now, in terms of the disputes process itself, so as you can see here, the starting point is the issuance of the assessment. And after the issuance of the assessment, the process depends on how you want to proceed. So previously, the process was moving on to reconsideration. More recently, the tax authority have introduced a process called review or review of returns. So once they've issued the assessment, they could review the assessment even before the reconsideration. And you have to submit the request for review within 40 business days of the assessment. So it's very, very important to monitor the date of the assessment. Then after you've submitted the review, then the tax authority has 40 business days to issue a decision, and then within a further 5 days to issue that decision. Once they've issued the decision, or they haven't issued the decision within that period, you have the right to go to reconsideration. Where you've submitted a request for review, you cannot go to reconsideration. You have to wait for a decision on the review or the expiry of the period from which the tax authority should respond to you on the review. Now, you don't have to go for review. You could go for reconsideration, as an alternative to a review. The question mark is, what's the difference? And I think that some people get some comfort in the fact that you're going through the maximum layers you can before you get a decision from the tax authority. And obviously the costs can be more significant after the tax authority when it goes to the courts. So if you want to maximize the prospect of having an assessment overturned, you may consider a review. On the other hand, some people may think that if you're asking for a review and then you're going for reconsideration, and both are at the tax authority level, what's the point? It's a duplication of process, and it may also be a duplication of costs, because you may ask your advisors to prepare a review and then later on go for reconsideration. I think the key difference between a review and a reconsideration is that a review probably goes to a different inspector, whereas for reconsideration, there's an internal committee of the Federal Tax Authority which decides on the actual case. Nevertheless, as I said, you have a choice to go for review or reconsideration, or go for review followed by reconsideration. And then once you haven't heard from the tax authority within the period from which they should respond, then you could go for reconsideration. And again, the time frame for reconsideration is similar for review. So from the decision of a reconsideration, review, or a non-decision within the specified time period, you have another 40 business days to apply for reconsideration. And in the case of a reconsideration, there are certain requirements, you have to submit within the time period, and also the tax authority has to issue the decision within a certain period of time as well. Once you have a decision from a reconsideration, then you have the right to go to the Tax Dispute Resolution Committee, which is an independent committee. It's not part of the tax authority. It has one judicial member and it has 2 tax experts. And this committee has a right to hear disputes in relation to reconsideration requests. There are some formalities you have to comply with. Again, you have 40 business days from the decision of reconsideration, or alternatively, if you haven't heard from the date of the reconsideration within 40 business days, then you could go to the committee. There are some other requirements as well. You have to pay the tax. This changed from the previous requirements, which was paying the tax and also the penalties. So this was made a little bit easier for the tax authority. The committee also have to issue the decision within 20 business days, and this could be extended to 60 business days as well, and then notify you of the decision within 5 days. In the case the amounts of the tax and penalties are less than 100,000, the decision of the committee will be considered as final. So you cannot appeal any further where the amounts in question are lower than this threshold. The question mark is that if you don't hear from the Tax Appeals Committee within a certain period, same as before, is this considered a deemed rejection if the time period expires from which the committee should respond? And I think there is an argument that you have a right to appeal to the courts if you don't hear from the committee within that time period, but there's also an argument that it's a deemed rejection. Of course, the significance of a deemed rejection is that if you don't appeal, then your case is time barred. Whereas if you have the right to appeal without the obligation, then there's no time bar. But there has been a decision from the Supreme Court on this issue where they indicated that they may view it as a deemed rejection. So it's important to not only look out for the decision from the tax authority and the Tax Dispute Resolution Committee, but also wait for the expiry of the time period and treat that as almost like a rejection. Once you have a decision from the Tax Dispute Resolution Committee, or you don't have a decision within that time period, you could appeal through the court process. And there's 3 layers at the Court of First Instance, the Court of Appeal, and then the Supreme Court. Now, in terms of the first appeal to the Court of First Instance, you have another 40 business days in order to make that appeal. And once you make the appeal and you go through the process is fairly, written. So you have to do all the submissions in writing. Sometimes the court may ask questions. Once you submit the appeal, the tax authority can respond, and then you have the right to respond to them as well. So it's a process of exchange of memorandums. I think one thing is, before you go to the court process, you do have to pay 50% of the penalties as specified by the committee. So this is another hurdle and requirement. You have to pay it in cash, or you could even have the bank guarantee. There is a clarification process under the tax procedures law and generally, which is implemented by the tax authority, and this is to give businesses tax authorities' view on the interpretation and application of the law where there's some uncertainty. Why would businesses do this? It gives you some certainty. And although it's not legally binding on the tax authority considers themselves administratively bound. You do have to disclose all the facts before you apply for clarification. If you omit some facts, the tax authority won't respect, and they may change their view. So it's in your interest to disclose all the information. Of course, if you don't ask for clarification, you don't even know what the view of the tax authority may be. And you may go for informal clarification from an individual member, but that's also unofficial, and it doesn't represent the view of the tax authority as a body, and it's not binding on the tax authority, even administratively. So if you want the tax authority's view, it's better to go through the formal process. Typically, they issue a tax clarification within 50 days, and they may make it public depending on if there's the public interest. So I just wanted to touch on some of the key issues in relation to tax disputes. So the first one is that the question often is asked that, you cannot litigate against the government, it's not allowed. For tax purposes, it's allowed. You have to self-assess. The tax authority can amend that self-assessment and assess additional taxes. You, as a taxpayer, have the right to challenge the tax authority's assessment. So there's no restriction on you other than the formal requirements which are mentioned in terms of not litigating against the government. And then there's another secondary question about the independence of, a lot of people say that, the external committee and even the courts, are they biased towards the tax authority? In our experience, the process is very independent, impartial, and fair. So they're not there to rubber stamp the tax authority's view. Their purpose is to apply the law. So they have to look at what the tax authority is doing and whether it's in accordance with the law, and whether the assessment is based on the law and has proper basis. If not, they will overturn it. Also, you have to bear in mind the costs and the time as well. Of course, if you're litigating, the process can be quite long. It may take several years before you have resolution, and it will also cost a lot of money going through all the process, the external committee, the courts, all the way to the Supreme Court. You're talking about potentially a significant cost, so therefore it has to make sense commercially for you to continue. Of course, in the case of disputes under 100,000, the tax committee will make the final decision. Formalities, and I can't emphasize this more, you have to make sure you comply with the formalities. Timelines of appeal, whether you have to pay the tax or the tax and penalties. And in the case of, for example, if you're going to the committee, you have to have applied for reconsideration. If you're going to the courts, you have to have gone to the committee first. These are formal requirements. If you don't meet them, your appeal will be rejected on procedural grounds, even without consideration of the substantive elements of the appeal. Even though your case is right and you're absolutely right and the tax assessment shouldn't have been issued, but you can't do anything. You, as part of the formalities as well, you have to give a power of attorney to your lawyers as well. Sometimes this may take time. So it's good to do this at an early stage. In some cases, for example, you have to have this legalized overseas and rubber stamped by the embassy overseas, and this takes months. So it's better to start this process early. Also, I touched on clarifications. There's a debate about whether, once you have a clarification, whether you could object against that clarification. And I think the position of the tax authority previously was, if they've issued a clarification and you've disagreed with it, you could apply for reconsideration. However, the court's view is that if the clarification doesn't relate to an assessment, then it's not an administrative decision which is capable of being appealed. So again, this is something which is up in the air, but there is a decision from the final court that a clarification is not an administrative decision that can be appealed. So although at the point you receive a clarification, you know that you're in a dispute situation with the tax authority, but until they issue an assessment, you cannot do anything. And obviously this has consequences on the penalties, because if they issue the assessment after an audit, the penalties are higher. The next point was voluntary disclosure. Many taxpayers make a voluntary disclosure, and they do that to reduce the penalties. But there may be some consequences in relation to your appeal, because once you submit a voluntary disclosure, you're acknowledging and recognizing that there's an error in your return. And if you're obviously submitting the voluntary disclosure, you may forgo your right to appeal. Although you're stopping the clock when it comes to penalties, you may forgo your right to appeal, and this is an untested area. I've already touched on the deemed rejection point. So where there's a timeline for the tax authority and also the committee to issue a decision, and they haven't issued a decision, for the avoidance of doubt, it's better to treat this as a deemed rejection, and therefore you have an obligation to appeal against the non-issuance of a decision within that time period, just to make sure that your appeal is not time-barred. Also, before proceeding with the appeal, it's good to understand the merits of your appeal from a legal perspective, because this will give you an indication whether it's worth going ahead and appealing in the first place. There's also questions in terms of whether UAE previous court judgments, which aren't published anyway in a wide way, set a precedent. There are some other more established and mature jurisdictions where the decisions of higher courts are binding on the lower courts, and therefore you could rely on those decisions as precedent for the lower courts. And they have to follow it, and they're obliged to follow it. The UAE is not a common law jurisdiction which has this concept. It's a civil law jurisdiction, so there's no concept of binding precedent. However, if the same court or the same judges are sitting and deciding on a matter, and they've already decided on something, the chances are that they're likely to decide the matter on the same principle and same facts in the same way. So although there's no doctrine of binding precedent, the courts will probably end up following the previous judgments. Now, the final point was settlements. There's no formal settlement process. In some countries, of course, you could settle with a tax authority. And by settlement, I mean that, the position is uncertain and you're in a dispute with the tax authority, and you both agree on a number in full and final settlement of the appeal. And this process, for example, is there in Saudi. There's no settlement process, but there may be scope to discuss with the legal department of the Federal Tax Authority where there's a technical case which has absolutely no basis, and they may consider withdrawing the case. Obviously, that can happen. I don't know how much time we have, because I wanted to go through a few other points. It's fine. Okay. I just also wanted to touch on avoidance as well, because I mentioned earlier evasion, and there's also a general anti-avoidance rule in the corporate tax law. Many people are asking about the interpretation and application on this law. Now, historically, there's only very few jurisdictions which have had a general anti-avoidance rule. And some of the first ones, for example, Canada and Australia, and many other countries had case law, which was considered as binding, through which they established a precedent. But they didn't have a general anti-avoidance rule. Now this is becoming more and more common. Of course, the UAE has gone for a general anti-avoidance rule. Why countries were initially reluctant to have a general anti-avoidance rule? Because it does create uncertainty, and it's very important for countries to give certainty to businesses, and having a general anti-avoidance rule creates a little bit of uncertainty. There are some other countries that have specific anti-avoidance rules to address specific areas of law, whereas a general anti-avoidance rule gives the tax authority, in certain general circumstances, really wide powers to disregard the transaction, to recharacterize, and that's why they need to be very carefully thought out. Now, in the case of UAE, this general anti-avoidance rule applies where you have transactions or arrangements. The main purpose, or one of the main purposes, is the avoidance of tax, obtaining a tax advantage, and there's no valid commercial purpose, and the transaction or arrangement is not aligned with economic reality, does not reflect the economic substance, then in that case, the tax authority has really wide powers to do certain things. Now, what kind of things do they take into account that, for example, that avoidance is there? They look at the substance and the form of the transaction, the end result of the transaction, the method and timing through which it was carried out. They look at whether it affects another person and it changes their financial situation. They look at whether it results in non-arm's length conditions between different people. And in terms of the powers, the tax authority has really wide powers to counteract the actual avoidance or tax advantage, or adjust the tax. And they may, for example, if they've given an exemption, they may cancel the exemption, they may disallow the deduction or relief, or they may recharacterize or reclassify the nature of a payment or effect of the transaction. So again, very, very wide powers, and this is different from evasion. So in the case of evasion and avoidance, the difference really is that evasion is illegal. It's a criminal offense. And the essential ingredients of evasion and how it's different to avoidance is that when you have evasion, there's certain elements which are there. For example, dishonesty. And they must be deliberate as well. So if, for example, you're concealing information from the tax authority deliberately, or you're providing false information to the tax authority, again, deliberately, you have to do it with intention. And you may provide false information, you may forge documents, you may change the dates in documents or the details of documents, or you may provide false documents to the tax authority. This all falls under the category of evasion. So again, there's a high bar, it needs to be deliberate, it must be intentional, and there needs to be an element of dishonesty, either providing something which is false or concealing something from the tax authority. And the tax authority has wide powers to apply penalties which extend to 3 times the tax and a minimum of 1-time tax, in addition to imprisonment. And also, this offense extends not just to the business or the company or the taxpayer, it could extend to any other person, including an officer of the company, a director, or anyone else, even another taxable person. If they're involved and participating directly in the evasion, they're aiding or abetting, or they're an accomplice in the event. And the tax authority also has power to approach the court and ask details of the judgment to be published. So essentially, there's a name and shaming implication here as well, and this has to be borne by the taxpayer. The tax procedures law sets out the offense of tax evasion, and it sets out certain things which are considered as tax evasion, and then the penalties for them. So as you can see from here, deliberately failing to settle the tax, deliberately understating the tax, deliberately decreasing the tax due, or deliberately committing acts of omissions constituting tax evasion. And in this case, it's a prison sentence and maximum up to 3 times tax. And there's other offenses where you're involved in evasion, where the sentences or the consequences are slightly lower, a maximum penalty of 1 million dirhams. in the case of deliberately providing false information, date or incorrect documents, concealing or destroying documents, or stealing documents in possession of the tax authority and destroying them. And I think, again, the key thing between evasion and avoidance is that I think there was a quote once, the difference is the thickness of a prison wall. Again, evasion is illegal and avoidance is legal, but obviously the tax authority, if it's unacceptable avoidance and involves tax-motivated factors which have no commercial purpose, then the tax authority has wide powers to adjust the tax due. It doesn't make it illegal.
Thank you very much, Mr. Siraj, for such an informative session. It is really good to learn so many concepts from you. Thank you so much. Can I request Chairman, Vice Chairman Balram to join on the stage for a token of love and appreciation on behalf of all of us as members. And see Hanuman sir, please, if you can also join on the stage. Right, let's move to the next topic of the day, which is going to be on the permanent establishment and POEM and non-residents area. As you know, a lot of companies in UAE have senior management sitting in UAE while businesses run across the world, so that leads to a POEM problem. Then we have issues with permanent establishment of a lot of businesses not having business, like not having a juridical person here, but still operating through other means of permanent establishment. And then we have to read these laws in line with the tax treaty. So all these concepts creates a lot of complexity. So to take up a topic like that, we have a next speaker with us, CA Sandeep Kumar, who is the associate partner with WTS Dhruva. And to introduce him, to formally introduce him onto the stage, can I request C. Amit Khetan to join on the stage? Give a big round of applause for Amit.
Almost we approach to the afternoon, but it's a breakfast session, so I would wish one more time. Good morning, ICI family. Thank you so much. And the next topic is about POEM, the place of effective management, and I would say the place of effective management where the magic happens. And when we talk about the business, you knew that what the magic means in a business. And finding the place of effective management in the UAE corporate tax world is like a treasure hunt. But you will not find the gold, but you will find the tax breakers in that. And if I talk about the PE permanent establishment where the non-residents get a taste of the UAE's tax charm. And to hear more about these topics, we have CA Sandeep Kumar with us. CA Sandeep Kumar is an associate tax partner at Dhruva Consultants. CA Sandeep is playing an important role to shaping modern tax solutions that are data-driven. He is having a rich background in direct and international tax for more than 14 years. His role as a tax director with Big Four firms honed his skill and strategic dispute resolution. He has served the client across multiple regions, handling the intricacies of taxation in various industries from energy to retail. So please welcome one of the most experienced and dynamic speaker of today's session, CA Sandeep Kumar. Ladies and gentlemen, please put your hands together for CA Sandeep Kumar.
Good morning, everybody. So I have few learnings today. One of the learning is that I'll be requesting next time that my session should not be at the last. There is a tremendous pressure to have this finished, which is reasonable. But then I have my own reasons to have my 30 minutes. Reason is I've traveled from Abu Dhabi for this. Right? See, the moment I said I've come from Abu Dhabi, you guys have been little empathetic towards me. right? You will now promise me that at least you will hear me for 30 minutes, right? That's the basic promise I'm expecting from you all. No scrolling of mobiles. If you are not finding the topic interesting, we'll make it interesting. That's the endeavor, right? But the idea is, while I was coming to Dubai, I was thinking, how can a topic of a non-resident, I should make this interesting? You know, people have been given heavy doses of free zone. They have been given heavy doses on how the litigation will happen. And a topic which is on a non-resident taxation may not, appeal to you all. Is that right? You are still interested for non-residents? You still do care for non-residents as to how they will be taxed in this region? Is that important for us? Fair enough. But let me also say, instead of jumping into non-residents, if I still tell you that still there is a vast majority who will be interested to know that by virtue of having decision-making in the UAE could even make such non-residents equivalent to a resident. Are you aware of this? I think as a fraternity, you guys are pretty much aware of this, right? So what I decided when I was, going through the deck, and these decks are standard, please understand. I can make them go through it, you can have it at a later stage, but the idea is not to run through the deck here. The idea is more to understand from your perspective as to how do we deal with such kind of situations. Is that making sense so far? Yeah? My introduction has been done, but thank you, ICA Dubai chapter, for having me here. So how am I going to make this more interactive for you all? This concept of place of effective management, how many of you are aware of this concept? Aware? I think majority of the hands are saying they're aware of it. Can we call ourselves to be experts in poem? Can we call ourselves to be expert in poem in the context of UAE corp tax law? Why would that be? Because, guys, you promised me. I came from Abu Dhabi. I got that empathy from you. It didn't last even for 2 minutes. Right? Why do you think we do not have enough guidance when it comes down to poem? Do the authorities have given us such indicators as to how a poem will be determined? So why am I here then? What am I going to talk about? If something has not been elaborated in the law, then how am I going to talk about it? Right? But it has huge repercussions. Do you understand the repercussions here? The repercussion is, are we familiar that in UAE, majorly the headquarters is sitting in the UAE? Do we agree? Last ones? Or you agree? Perfect. So if we are agreeing to this, just imagine now, if tomorrow FTA comes and say, for the subsidiaries that are operating outside of UAE, start paying tax in the UAE at 9%. Will that make you sad? Happy? Happy? Sad? Bothered? Troubled? Right? How do I deal with this then? Because that's the reality of this market, right? I visit any client, the first question they ask me is, should I go for the poem registration? Why this fear? You know why? Because at the back of their mind, they feel that the management, effective management, is sitting here. Is that a right fear? What should we do then? As an advisor, should we tell them to go and register? I have a mixed response coming in. They are saying yes. Some of them are saying why? Why do you have to go? Let them come. Reasonable? Guys, reasonable, right? So then, how do I deal with this? There are ways to deal with it, okay? But those dealings have to be dealt with very carefully. 30 minutes is not the session where you can get the answers. Let me make it very clear. Okay? This is not an exercise which could be wrapped up in 30 minutes to say whether I have a poem or I don't have a poem. No. But however, when you walk out, at least you should have some visibility as to how this aspect needs to be dealt with now that you know the repercussions are huge. Okay? I am not talking about subsidiaries that are operating in tax-free jurisdictions like the Jersey or the Cayman. I am also talking about certain operating entities dealing where there are corporate taxes, but still the management, if we have to call so, is getting effectively managed from the UAE. It could be a likelihood case, right? Perfect. So we know the consequence of POEM could be far more serious. We know that when the lawmakers came out with the FTA decision number 3, they mentioned about POEM entities registration aspect, which means they do believe we'll have or we'll end up with certain cases where we do believe there is a POEM of a UAE entity here in the UAE, right? The POEM sits in the UAE. Are you aware of these deadlines? The registration deadline, anyone? There was a first session that happened by Prateek in the morning. Any guesses? That was PE. I think the session of Prateek has to be repeated again. The POEM registration. Decide among ourselves, 3 months, 6 months, 9 months, or we don't have to right now. Huh? 9 months, no. 3 months from the close of the financial year of the foreign entity, maybe yes, maybe not. This is what the lawmakers have said. If the non-resident, in cases where it is after 1st of March of 2024. But why did I rush to the registration aspect? You know why? We were getting calls. Should I register by 31st of May? Because somehow there was a news in the market that the POEM entities need to be registered by 31st of May. By any means, do you think this to be true? That we need to get registered by 31st of May? After listening to the first session where I'm assuming you all were very active? Couldn't be, right? 31st of May was never in the pipeline, right? And that's the whole reason I decided, let me focus my energy on a POEM aspect rather than talking about how a non-resident get taxed. I will spend that time, of course, because I'm conscious of the time. Since I told, I was given 30 minutes, so I have to finish it in 30 minutes. But on the POEM aspect, let's be clear. The word says place of effective management, right? Does effective has its meaning? A place of management versus a place of effective management. Can there be a difference? What could be the difference versus effective versus a place of management? Final effective decision making. What is effective decision making? You put an effect, then it becomes effective? Strategic decision making, right? Can I say key commercial decision making? Strategy, right? If you took one strategic decision in UAE, you have a POEM? Does it make sense? It has to be non-stop. Huh? He said non-stop. Let me continue to make strategic decisions throughout the year. But yes, I will not say non-stop. I said there has to be a regular aspect, right? We need to see the situation as a whole, right? We cannot just say one decision taken, the POEM is there, right? Strategic key commercial decisions that will be very, very peculiar to the business, very important to the business, policy-making decisions, right? Taken as a whole, on a regular basis, right? Then we may say, yeah, there could be a POEM. But you know what has happened? The POEM guidance came down in the explanatory guide. Okay? Are you with me so far? That explanatory guide is not there on the FT portal now. What should we do? Should I still rely on the guidance? Should I still rely on the guidance? No? But the guidance was an indicative guidance. It was not a binding guidance. They were giving us a very right set of direction to go with, right? If I need to go down one step further, this guidance was majorly in line with what the OECD commentary has stated with respect to POEM. Have you heard of OECD? It's a Bible for tax consultants. We refer to that quite often in terms of interpreting the international tax laws, right? But tell me something. This poem concept, do you think it is unique to UAE? Have you used this concept for checking the dual residency? Yeah? Where you are, by incorporation, you are a resident. By effective management, you are also a resident. But if you are residents both ways, how do I decide that where am I a resident, where I need to pay the taxes? Is this a good thing to be dual resident? Guys, I came from Abu Dhabi. I have to keep reminding you. I have just 15 more minutes to go, in which I have to cover PE also. Understand my pain? PE. It has taken years, the concept to evolve. I have to spend 5 minutes to explain you. Right? But please tell me, the dual residency is a bad thing or a good thing for you? You need clarity, right? Where I should be taxed. Because generally, when you are a tax resident, you get taxed on your global income. Do you want to pay taxes on global income and nobody gives you credit? Would you want to be in that situation? That's where, in treaties that we have with the other countries, you will have something called a tiebreaker. Heard of tiebreaker? And the tiebreaker rule is, conclusively, if you have a poem, there you will be treated as a resident. So, does incorporation matters? And in respect of, particularly in respect of the treaties, it doesn't, right? So there, the poem becomes very important. Now, imagine the pain of these businesses who are saying that we may be doing decision-making effective, non-stop, effective, here in the UAE. Are they at risk? What should they do? Live with this risk? Registration. This guy must be a consultant. For sure. What should they do? Wait for it. What should they wait for? God will come, give some kind of a guidance. Do it, otherwise penalties are forthcoming. What should be done? Advise. What advise? Huh? What to do? Oh, it was on me? I got the joke very, very late. Fair enough. Good point. Come to us. That's the whole point. That's the way I traveled, you know. At least out of this, 5% also gets converted, my job is done. Right? But nevertheless, what happens in the poem then? The key point is, we don't have guidance, enough guidance. The guidance was coming in the guide, that was taken back, understood, fair enough. Can I do something more today? Can I plan this? At least, there are two ways to do it. That's what, you know, that's coming to a head. And please tell me if this makes sense to you all. Shouldn't the companies which do feel that they have a risk of having a poem in the UAE, shouldn't, based on the best practices that we have, because we all agreed this is not a new concept, agreed? Shouldn't, based on the best practices, they should map their operations to see, do I or will I be ending up creating a poem in the UAE 1? Is there a way I can now change this decision making, now that I know that I will be levied with a 9% tax going forward eventually, can I mitigate it by doing something which minimizes the risk? That's option 1. Is it a safe or is it a reasonable option to go with? Many clients are insisting us to do so. Okay? They are saying, we don't care when the FTA is coming out with this guidance. We want you to evaluate based on the best practices. Tell us today, if we have a poem, then we should see as to how we can best manage this. If we are unable to manage this, then let us go with the registration. That's one set. Other set, I have limited experience, of course, in taxes, but it's strange for me, none of the clients have gone forward and said, I have a poem in the other jurisdictions. Mostly it is alleged, right? People, you know, too much of transparency in tax also is not good, somehow. That's what the experience says, of course, but we should adhere to the laws. That's not the message I've come here to, you know, deliver from Abu Dhabi, for sure. But the other aspect is, shouldn't the guidance come from the FTA for us to take this decision then? Which is more clearer, which can be relied upon, and then basically the decision making can be done based on that. If that is the case, we may continue to wait. So there are two set of choices that you have right now. You may live with it to say FTA will come over to give some guidance, and based on that, you will evaluate the risk. Or you could be slightly prepared in terms of utilizing the best practice to see whether I may end up creating a poem in the UAE. Now, once that decision is done, of course, you are better prepared. That's first. Of course, you are then able to mitigate it by any means. That's something which we can put on the table. But either way, you know how FTA is evolving on this issue? Only 2 days before, when you register for the CT registration, there was a tab added. Are you effectively managed or controlled from UAE? You with me, guys? 2 days before. If somebody has to take a call, suo moto, very honest taxpayers, they do feel they have a poem, they want to get registered, they are scared, 10,000 dirham penalty should not be levied, they want to do the registration. There was nothing on the poem aspect earlier. 2 tabs added. The moment you select yes, it asks you, what is the start of your taxable period? Or from what date you are basically subject to tax and subject to corporate tax in the UAE. Now tell me, registration timelines have come. They say 3 months from the close of the financial year. By any means now, do you believe 31st May was the deadline for poem? It couldn't be, right? And at what stage will you be saying that I have a poem? Day 1 or after concluding the year? We have a panel after this. You need to be a little louder. After the year, you will not want to do it on day 1. So something that you cannot do it and you would not want to do it on day 1, you would rather want to wait for that year to close, right? After that, you would like to assess in terms of your registration, so that panic button which is prevailing can be addressed by you all. Okay? It should not be an unnecessary panic in this regard. What we could do at this stage is of adequate preparation from our side. With me? Guys, with me? Okay. So what I have in this deck, does this sound familiar? Which we spoke about? Key commercial decisions, concerned with broader strategy, conduct of the business as a whole, regularly and predominantly made and given. Is it visible? Yeah? That's what the guidance was in the MOF explanatory guide. Now, what I did for you is this. We put those factors under 2 buckets, primary factors, secondary factors. If you look at them, you know, everybody will say in today's context, they may be subjective. You may not necessarily have your board of directors at one place. You have virtual, you know, board of directors attending meetings to teams. What can happen on that? That's not the session where I can give you these answers for. You have to visit us. Right? But still, the factors have been put across to you in such a fashion that at least it rings a bell to you. At least from a residency perspective, this is something you should be started thinking. Right? What else? Then, considering that UAE hasn't given the guideline, I went to see the OECD and the UN commentary. Because this tiebreaker thing is already there. And they have decided as to how the poem needs to be evaluated. So they came out with these factors. You know, most of them will be very similar to each other. Like you can see a distinct. In the OECD guidance, it says accounting records kept. In the UN, it says most important accounting records kept. How do you define most important? Right? So what is it? It's an indication. Will you be able to interpret on your own? Would you need help to have this understood? That's where the preparation lies when it comes down to poem matters. I have spoken about this. You will get taxed on your global income the moment you admit the poem. Has anyone, consultant group here, has anyone gotten an entity, foreign entity having a poem in the UAE, registered for UACT? Anyone in this group? You have gotten it registered? It has been approved? Sorry, who said no? It has not been approved? It is still under process? Yours? Under process? 3 of us are now in the same boat. We are also waiting anxiously. What did we do wrong? Because you apply for the other registrations, the approval came automatic. right? You apply for the poem registration, under review. Even the FTA doesn't believe somebody will be forthcoming to admit P on their own. Can you beat that? That's what it happened. But yes, at least I know there are 3 people who are with me, 2 people who are with me on this. We are also anxiously waiting if the FT approves this. Do you want to ask me, why did we, after all the lecture I gave you, why did we go on our own to admit a poem for that client? Anything in your mind? Huh? Sample. If my client listened to you today, huh? One at a time. I'll come. You're saying something? Lower corporate taxes compared to other jurisdiction? Foreign participation on other. Who's that person? Can I see him? Because the other jurisdiction may have a 0% rate. You admit a poem, you'll get a 9%. Then the participation exemption condition may get satisfied. But they didn't clarify as explicit as much at this stage, right? But yeah, I agree, that's one. What could be the other reason? Sorry, something was coming from here. Higher tax jurisdiction in that area, so wants to avail the lower tax. Correct. So more of a planning thing. Or maybe some losses sitting in that entity, which if I'm able to bring it as a UAE tax resident can be grouped now to avail. Yeah? There could be multiple reasons, right? But is there a vested interest in terms of admitting poem on your own? Otherwise, in general, I have not seen people coming straightforward to say, oh, I have a poem, I want to admit. Right? That doesn't happen, right? But that's where you need to be a little careful. That's where the takeaway from this session is, if you have certain clients, if you have businesses where you have this kind of a risk coming in, please measure. All right? Please measure. Sorry? Admitting poem? You're coming on your own? You're saying, I am managed here. I am a tax resident here. I want my global income to be taxed. Unless it turns out there was a loss sitting there. Not all answers I will give you here. See, scope of non-resident, I'm sure after this you are not even interested. You just said, because I told you I came from Abu Dhabi, you said, okay, yeah, we'll listen to you for 15 minutes. I agree. But scope of non-resident, I think Prateek had given the session in the morning very clearly. You are a non-resident taxable person when? When you are not a resident person. That's one condition. Is this clear? You become non-resident, one, because you are not a resident taxable person. And then you have 3 aspects that may come through. Either you have a P in the UAE as a non-resident, right? For you to be taxed. Or as a non-resident, you don't have a P, but you ended up earning a state source income. Right? Guys, say yes. At least. Just not for the sake of it, you know, state source income, right? Third aspect is nexus. Nexus is what? Immutable property so far, right? And that too for a juridical person, not for a natural person, right? That's what it is being displayed here. The only thing which I didn't say is after you are classified yourself under these categories, if you are a P, then the income attributable to the P, right? If you are a UAE source income, so attributable to the state source income other than the income which was attributable to the P. Because if it is attributable to the P, you will be under the first bucket, right? And the nexus, attributable to the nexus, which means the income that you will derive from that immutable property will be taxed. Make sense? What should I say on P? 2 minutes I'll take. What do you want me to comment on P? Are we aware of this concept? Are we aware of this concept? See, he's very active. He wants to finish off. We have 15 minutes to go, right? Is this P concept familiar? The only thing I want to tell you here is, the concept of P in the UAE law has been imported. Majorly, the OECD guidelines have been picked up, okay? You will not see a service P definition here, Okay? What you will find in the PE definition will be fixed place, construction installation PE with a 6 months threshold. You will have a dependent agent, and, dependent agent PE, kinds of PEs that we'll mention. Of course, then you will have certain activities which are, even if you're doing, will not end up making or contributing to the PE activity, right? There are certain exclusions. Now, PE definition under the law is inclusive for the fixed place. A branch office, very popular here, right? Branch offices, you would have done certain registrations. BO are the permanent establishments, right? Do you foresee any risk now that now the branch offices will be registered as a taxable person, as a non-resident taxable person? Will there be an issue on profit attribution? Do you feel that there will be now issue on the profit attribution to these branches? You feel or you don't feel? You feel. Can we take in the panel round? The rep office part. But yes. But do you think the branch offices will be attributed now? You know why? You've seen EPC contracts, majorly. What used to happen? You ended up creating a BO, saying that they are only doing admin jobs, right? They're doing nothing. They're not doing any value add. But today you have a transfer pricing in place. You'll have functional analysis being taken care of. The UAE government would like the profits which are due to the region to be get attributed to the P. That's where the P concept will become relevant. But is there some confusion around the P registrations? Or you guys are absolutely clear as to how a P has to be registered? I have 60 seconds. Are you aware of some issues on the P registrations? What are those issues? Huh? Little louder. When to register? Then, that is the issue you're facing? Risk mitigation is fine. Somebody said 6 months, 9 months, right? You said some timelines on this, right? 6 months, 9 months from where? From the date of? How you know that the P, when it came into existence? From what date you believe the P came into existence, by the way? A P exercise for a foreign enterprise, when he comes over, he undertakes something, we wait for, for the activities to finish. We see, oh, you spent 183 days. Oh, you have these employees coming regularly. Okay. After 183 days, you may say that there is a P, but you are now telling me that I should get myself registered this is on or after 1st March 2024? Is that what we are thinking? Particularly on the 6 months side. From the contract is signed. Question that was raised to the FTA was, should I register a P from the date when the tax law became effective, which was June 1? Or should I register a P when the taxable period of the P starts? From that particular date I need to do? Or should I wait for the contract to sign to explore whether I have a PE or not? What is the answer? Date of establishment is very subjective. How do you establish that the P was established on this date? Particularly when you had branches prior to the introduction of the law, right? So these are thought-provoking questions for which you need to visit us. But fair enough. This is something I wanted to just cover in a short session of 30-odd minutes. Of course, there will be many questions. We may try and answer them for you.
Thank you, Sandeep, for a brilliant session. Big round of applause for Sandeep, please. Let me say, even being the last topic of the day, he has kept the energy high. He has kept it very interactive. I think that is something really commendable. Thank you, Sandeep. Really appreciate it. Can we request Chairman, Vice Chairman, and Amit to join for giving a token of appreciation on behalf of all of us? Now we come to last part of the session, which is panel discussion. I just wanted to mention that we might run few minutes late because this panel discussion is one of the critical sessions of the day. So please bear with us. And we have one more speaker with us, Mr. Basel Arafe, who has joined with us to be on the stage on the panel discussion. And to introduce him, may I request C.A. Dixit to join on the stage for the introduction. Big round of applause for CA Dikshit.
Good afternoon. Good afternoon, everyone. A marathon morning, and we are coming to the end now. We have been learning a lot of things since morning. As somebody said, the beautiful thing about learning is nobody can take it away from you. So that's what I would say, that we have learned a lot of things, a lot of clarities have come, and now we come to that last session where most of you will be able to ask your practical questions to our panel, and they'll be able to answer. Let me introduce Mr. Basil. Mr. Basil is a corporate income tax partner based in UAE, currently focusing on newly introduced corporate tax. Prior to moving to UAE, he was a partner in Deloitte, Canada, with 16 years of practice in corporate taxes. He has been practicing mainly on the practical aspects of the corporate taxes. So he's one of the brilliant speaker, or one of the brilliant panelists who will be able to answer a lot of your queries. So without taking much of your time, since we are running late, let me welcome all the panelists and Mr. Basil to come here on the podium and take it up. And also, our moderator for today is Jay Bhai. He is going to rock this session. So please, everyone, welcome on the podium. Thank you so much. Thank you.
And we have all the speakers on the stage for the panel discussion along with Jai Bhai. Big round of applause for all the speakers and our Vice Chairman Jai Prakash Agarwal to take up this session from here.
Let's start. Basil sir, thank you very much for joining. Let me start with you because I have heard all of them and I know something they have spoken about on free zones, and most of the questions are already covered. So the good thing about my panel is you have already covered all the questions, so not much left there. So my first question to you, Mr. Basil, is you have seen accounting, right, in the region, the way accounting and the financials are getting prepared. Now, with corporate tax coming in, what are the three areas which you will suggest all the consultants, all the finance managers, finance heads to look into, which needs attention under corporate tax, which we were not looking earlier? Three areas.
From a tax accounting perspective?
That's correct.
Well, welcome everyone, and thank you for having me today. Very happy to be here with you. I think with Q1 behind us, IS 12 was always a hot topic, and then IS 12 will remain to be a hot topic. What we've learned from Q1 is deferred taxes is not an easy concept. Deferred taxes in the UAE with differences in terms of how you do investments, fair value accounting through OCI, whether it's debt investments, equity investments, etc. There's a big level of complexity there. In Q1, for most of the publicly listed entities, deferred tax was not an issue because of the high materiality threshold, and 9% of an impact was not material. When we get to Q2 and Q3, this will become a lot more important. So IS 12 and deferred tax can be a very tricky world. And when you have free zones involved, and if you have a group of companies, some are free zones, some are not free zones, what do I use? Do I use 0%, 9%? Do I use an average? How do I disclose everything on consolidated financial statements? That can be very tricky, and disclosure requirements becomes a lot more important. If your parent company that's preparing the consolidated financials is a free zone entity, and it's a qualifying free zone entity, then generally speaking, that entity would have a 0% statutory tax rate. So then everything that's taxable becomes what we call a rate reconciliation item. So you would separately stand out. And that has a big impact when looking at what my expected rate is versus my effective rate and explaining that. Financial statement readers do not like significant adjustments between expected tax rate and effective tax rate. So that is an important consideration from a disclosure perspective to think about.
Perfect. Deferred tax is something which we have to look into. We were not looking into deferred taxes. Next question I will go to Siraj on these deferred taxes. Now, when we are calculating these deferred taxes, from your experience, the adjustments which will come through when we are adjusting everything, other than deferred tax, we are adjusting our opening values, opening balances as well. The difference which comes in, we park in the profit and loss, right? Will this be allowed as a deductible expenditure? Can you get the mic here? Am I audible properly to the panel? Perfect. Yes, please.
Yeah, I'm not.
I think it's not working. 1 second.
Hi.
Yeah, please hold.
I'm not an accountant. I'm obviously a lawyer. But deferred taxes is mainly timing differences.
Timing differences.
Yeah, so
since you are a lawyer, I will skip it. I will directly again go to Basil. Basil, what do you think? the changes in the opening balances, which we park in the profit and loss account, will this be allowed as a deductible expenses?
So the deferred tax expense itself is not deductible.
The opening balances.
The opening balances.
Adjusted as per the corporate tax. We are adjusting corporate, as per the corporate tax, we'll adjust the opening balances.
Okay. So you're talking about the transitional provisions. Okay. From a transitional provision, when you look at standalone financials, your opening tax basis should equal to your closing net book value. And the only reason why you would have a difference is if your balance sheet amount does not reflect the arm's length principle. The easiest example, you purchase inventory from a related party, you bought it at $10 a unit, fair value or arm's length is $8 a unit, you would need to adjust not your financials, nothing forces you to fix your financials, but from a tax perspective, we will say $8 is your cost, not $10. So in the following year, when you are computing your taxable income, you have to take account of that difference. In this case, it will be a negative difference. If you purchased it for 8, but arm's length says it should have been 10, the rules should technically apply the same way. So the transitional relief rules, while they were put in there to sort of avoid aggressive planning, to avoid overcharging for certain items, nothing says it doesn't work, and the way it's drafted doesn't say that it doesn't work for cost that were underbid. So if I buy something for $8 when I should have bought it for 10, nothing prevents you from also making an adjustment in the following year.
Perfect. Thank you very much. Manu, you touched upon something. You said in designated zone, the purchasing has to be done from the manufacturer or importer. What do you think? We have to restrict to manufacturer or importer, or it can be from any other reseller and still we qualify for distribution qualifying activity?
The guide has given the scenarios. You're talking about the purchasing from a manufacturer or importer. In that example, it is the example they have given, example number, or the fourth example in the distribution and distribution activity. Imported by them or another person. Number one, then point, I would like to catch that point. Number two, the goods imported into the UAE, we don't have a record whether it is imported through the designated zone or other path, or who imported. By considering these two, I would like to take a stand. Whoever imported, if the other conditions are satisfied of the distribution activity, substance, resale, and all other conditions are satisfied, whether you are buying from a manufacturer or from a trader, subject to the conditions, we should be eligible for considering this as a distribution activity.
Perfect. Nasir sir, that's a reply to your question. This question came from our member, Nasir. Yes, if it's even a reseller, you can claim subject to you qualify all the conditions. In City Guide, it's just an example they have used, right? But they can go for a reseller as well. Let me go to Sandeep. Sandeep, beautiful session. We loved it, practicality of it. One question is coming from Ajay Kumar. Ajay Kumar, he says, is interest on fixed deposit with foreign bank, interest from fixed deposit with a foreign bank exempt as per double tax avoidance agreement? Double tax avoidance agreement, interest on FD with foreign bank is exempt. If we come to UAE corporate tax with that income, because it's an interest on FD for a UAE entity, which they have done in foreign, what will be the impact of exempted income for a qualifying free zone person in calculation of de minimis? 2, 3, 4 facts.
I think whosoever asked this question, I think I can meet him afterwards.
Ajay ji, are you there? Mr. Ajay?
There is a combination of complexities that he has added, and if those complexities needs to be answered here, then I'm sorry, I will have a word with him, and I'll say, okay, come. So this is not something which is a straightforward thing. You mentioned interest on a deposit of a foreign bank, then you're bringing the free zone angle as to whether the free zone angle will be able to utilize this as an exemption or not.
On the de minimis.
This is an analysis. This is not something which could be just spoken about and given in a 30-second scenario, to be honest.
So, Mr. Ajay, you contact Pratik afterwards and get your answer. Contact Sandeep afterwards and get your answer, please.
Yeah.
Is Piyush here? Piyush Sharma? Piyush is also not there. I think they put the questions and they went away. Let me ask this question. Yes, sir, you want to add something there, Mr. Basil?
From that question, though, there's an interesting topic that I just want to bring to everybody's attention here. There is an important distinction to make between taxation under domestic law and taxation under a double tax treaty. Double tax treaty will talk about taxation under domestic law in case of permanent establishment, but it's commonly used for taxation with respect to withholding taxes. So in the case of interest income as an example, the real question is whether interest income, if it's going overseas, whether it be subject to withholding tax or not. That's one consideration. That doesn't change the fact that if it's taxable in the recipient's hand, that's generally under domestic law. And that's where the complexities of the free zone would come into play, et cetera, et cetera. But there is a fine distinction between double tax treaty, withholding tax, and taxation under domestic law.
Perfect. DTA will prevail, double taxation avoidance agreement. With this, let me go to Pratik. Pratik, one question on registration. We are talking about, and again, it is coming from Aditya. Aditya, if you are around, that's your question. Normally, a real estate investment income is not taxable in the hands of a natural person. He is not required to register. But in case of UAE, there's something called broker card or BRN that individual has to take. Does this BRN or broker card considered as a license which makes that natural person to register? What are your thoughts? This BRN or broker card taken by an individual person for a real estate investment income?
So firstly, as you rightly said, that if it's a natural person and they are selling properties in their own name, then it's not subject to corporate tax if it's a personal income. Now, the second part is there are certain brokers and they have a brokerage license or different, cards to do brokerage activities. In these scenarios, it may be construed as a business activity if you're doing it regularly and to earn income. And in these scenarios, only a brokerage income would be subject to corporate tax. So when you're looking at the threshold, for example, for the registrations and all, you don't need to see the value of the property sold while seeing the 1 million threshold. You need to see the brokerage income or the income that you're earning from these activities.
Perfect. Broker card is not giving you a real estate investment income. It gives you a brokerage income, and that does not come under it. You must be having a license, and you do based on that broker card, not a real estate investment income. One more question. Anand Agarwal is asking, what is the status of owners associations in case of real estate? Owners association, how do you treat it? Whether it's a legal person, it's an association, how do you treat an owners association?
So ideally, there is a separate section when we are now going to the corporate tax registration portal. They have specified for clubs, associations, and other categories also. So you may go there and apply for a corporate tax registration under the category of association. And I think it will be treated as an association only. There is a separate section now for the association.
There is a separate section. If you are into owners association, you have to apply for an association as a registration. That's the take of Pratik. Sir, I'm coming to you. On your presentations, you talked about Tax Dispute Resolution Committee. My question, as a chartered accountant, when we talk about lawyers, like I thrown a question on accounting, and that was not your area. Now, in case of TDRC, how they will be able to, how exactly the panel is comprised of, what exactly the people who are sitting on the TDRC, and how they will be able to understand the accounting issues or taxes issue, because they, by nature, are lawyers, or accountant also sit on those panels. How exactly TDRC works?
Sure. The TDRC composition is one member from the judiciary and 2 tax experts. Of course, it's a challenge not just for the TDRC, but the courts in general, because tax is something very, very new. Of course, as I said earlier, all tax comes from the law. Obviously, there sometimes is interaction between the law and the accounts. But as far as the court's job is concerned, they have to apply and interpret the law and make a decision on the application of the law. But tax is a very new area. It's very complicated, and it's very technical as well. It's not easy for normal members of the judiciary to understand. And I come from the UK. The UK has a very established tax system, 20,000 pages of legislation, very detailed and prescriptive legislation, lots of guidance from the tax authorities, many, many commentaries, case law precedent, and the judiciary itself, they're tax experts. A lot of them who hear tax cases, they've had many, many years of tax experience, and they understand all the tax concepts. So it is going to be a challenge, but it's something that the judiciary will have to adapt to. It will take some time.
So judiciary will adapt it. They have 2 tax consultants and 1 legal expert there, right, sitting as a panel.
That's correct.
So that actually helps to some extent. Next question to you, quite personal. Are you sitting in any of the TDRCs where you can help our members?
No, I don't sit on the TDRC. We stay independent from them, and obviously we're representing clients before the TDRC, so there's a conflict there.
Perfect. Okay, let me move on to the next question. Very interesting question. I think since you take free zone, is city applicable for schools in DSO? We are talking about DSO. DSO is a free zone. DSO, Dubai Silicon Oasis, is a free zone entity. Schools are there. Do city apply on schools? It's a commercial property. What exactly your take on free zones for schools in DSO?
School, education.
School. Yes, school,
Of course,
education.
There is no, yeah, for education, there is no any special consideration like what is there in the VAT. That might be the reason for asking this kind of question, this question. So specifically, there is no any special provision for that one. The school service is given to whom? Natural persons. So any service given to natural person, it is taxable.
So can we break it in 2 parts? My understanding, schools will have to have 2 licenses. One for the school property under 1 license, and second is the operational license. School property, where rental is involved, can go into commercial property, right?
Yeah.
And that will be considered within the free zone.
Of course,
That's correct.
school property related, if you are coming to the school operation related, the income, school, what I understand from this is a school will have income tuition fee. Then additional fees similar to that ancillary activity. How their rental income will be? The rental income will be there from the real estate owner. Who will be the real estate owner? Depends upon that one, the taxability will come. So since the school is located in free zone, property owner may be another person who is the owner of the property located in the free zone. Commercial property, free zone to person, eligible for 0% qualifying activity.
Perfect, Manu. So break into 2 parts. Normally, schools will have 2 licenses, one for the property, second for operations. Property goes under commercial, and operations will go as the normal income. It will not go as a qualifying free zone entity. Sir, coming to you on legal cases which we are talking about, you said there are precedences available for case, but these are not publicly available. We cannot read what exactly the judicial system has made decisions of. As a lawyer, we want to understand, is there any forum available to lawyers where they can go through the precedences and develop their case and argue before the bench or the courts, or these are completely private documents not available to anyone, including the lawyers?
The decisions are usually private. They're issued, obviously, to taxpayers or the tax authority. They're not published by large. Of course, you'll find some firms that are involved or that are able to get hold of decisions. They publish the cases. We personally don't publish any of our cases because, obviously, I think we believe that we need the consent from clients before we could disclose the information specific to them. So I think that obviously there's no real precedent, and obviously decisions are not published, but there is some work happening in this space, so in the future things may change.
So in future it might be available. Today the decisions are not available. You have to go with individual cases which you have handled. Sandeep, coming to you, an interesting question. The foreign subsidiaries, you might have answered it, but it's coming from Surbi, and she has asked 3 questions, interesting questions. First one, the foreign subsidiaries of a free zone entity, the foreign subsidiaries, not the branches, the subsidiaries of free zone entities can be called foreign permanent establishment?
Can be called, sorry?
Foreign permanent establishment.
So foreign subsidiaries of a free zone entity.
Yes.
Can be called as a foreign
permanent establishment.
No, the subsidiary concept is a separate concept. Subsidiary has a legal existence. The permanent establishment concept is more of an extension of a non-resident or an extension of an entity. So if a resident entity is having a foreign subsidiary, you cannot equate that foreign subsidiary to be a PE of that entity in the free zone in any case. The concepts are different.
Straight answer, no, it is not a foreign permanent establishment. I love that straight answer. I go next to Manu on the same.
I was just going to say,
you want to add something? Yes,
so I think there's 2 angles to this foreign permanent established question. I think the first one is probably the free zone rules, which obviously has this concept. And as Sanjay said, there's no issue. But then you could still potentially have a foreign permanent establishment from the other jurisdiction's perspective, which would mean that, you have a taxable presence in the other country. And it's not through the presence of the people or anything such, it's through dependent agency. So another company can still be a dependent agent for you, and you may have a taxable presence. But this isn't a UAE tax question. It's a tax question for the other jurisdiction.
Perfect. I like the way Sandeep is taking his mic. Go ahead, Sandeep. You want to add something there?
No, nothing. I think that's why we are talking on the principles, of course. At a principle level, it is not. But then, are we saying that there could be situations where a subsidiary could be having a P in a jurisdiction wherein a holding company is situated? I have not gone into that kind of a detailing here because those becomes very fact-specific aspects. But at a principle level, if you ask, we have to respect the legal entity concept. That's where the subsidiaries cannot be just by default treated as a permanent establishment of the head office entity. That's the principle I was just stating.
So basic principle, you have a separate legal entity. It should not be, but as Siraj said, it can be depending on how do you opt for it.
In taxes, there can be many situations, right? But right now, the answer has to be more focused on the principle side.
On the principles. So by principle, you are saying it will not be there. I love that when this kind of actual interaction happens. Manu, this question is for you, and this is relating to free zone. You talked about end use. The question relates to Surbi again. It says, whether sell of capital items qualifies as qualifying income. Sell of capital items qualify as qualifying income. What is your take?
Here, end user concept, the first point what you mentioned is that the question it is mentioning about the end user. The end user concept will come when it is the free zone to free zone sales.
Assuming this is free zone, assuming this is, we are talking about designated zone.
Yeah, no, end user concept comes when it comes from the distribution activity. So leave that one. So we have to understand exactly what is the sale. Whenever any question come about the tax applicability of the free zone, I go through step by step the 4 steps. First, are you a free zone person? Yes, it is a free zone person. Second one, what is the activity? Second one we can choose who is the customer. Whether the customer is a free zone person or non-free zone person. In this case, the customer is in the free zone or non-free zone?
The customer is again free zone person.
Customer is a free zone. Then check whether you are doing any excluded activity. 5 excluded activities are there. It is not any of the excluded activities.
These are capital goods. These are capital goods.
It is a capital goods. Then you are eligible to be considered as a qualifier.
So let me put this way. Capital goods, I think the intent of the question is capital goods are installed in the factory or somewhere. They are not directly used in the... So will the capital items used in the construction, which is capex, can take the benefit of qualifying income? So in simple example,
let us take a fixed asset. Fixed asset is sold to another free zone person, eligible for 0%. It's a capital asset. A fixed asset sold to another free zone person, eligible for 0%.
Sorry, your take is yes?
Yes.
Yes, you can take it. So capital consumption, capital items in capex, if it's a consumption, can also take the benefit of it. I go to Basel. Basel, this is relating to qualifying commodities. Qualifying commodities, interesting question. It says whether petrol and diesel are included in qualifying commodities. Petrol and diesel is called qualifying commodities because it has a word called energy. So energy, petrol, or we get energy from petrol and diesel. So does it qualify as a qualifying commodities?
Yeah, I think that's the million-dollar question everybody's asking about. I think we were hoping with the guide that the definition of raw form would give us a bit more clarity in terms of what would go in there or not. I think the view is that petrol and diesel is probably modified enough that it's not going to be viewed as in raw form. And I think the views is that it's likely not going to be viewed as a qualifying commodity.
It might
probably,
include.
It probably won't. The views is it probably won't.
It might not include because petrol and diesel.
I don't know, man, if you have any different observations on it.
Manu has a smile there.
It's listed in the commodities exchange. Should be eligible to be considered.
So petrol and diesel is listed?
We have
to see that. If it's listed, it will be allowed as a qualifying commodities.
If it is listed as in addition to that, if it is listed in the stock commodities exchange, then definitely, it will come.
Perfect. Next question is on transfer pricing. It says, normally in other jurisdictions, we have a benchmark in the exemption limit. Will there be an exemption limit for local RP transactions? There are related party transactions, but they are done locally in UAE. Do you think there will be an exemption which FTA may come up with, saying if you are doing a related party transactions up to 10 million, 12 million, we will not look into transfer pricing or arm's length because everyone is sitting at 9%. I can see Sandeep. Go ahead, please. You want to go ahead with that?
See, since I may not be a TP expert here, but I'll just share the principle again. If you look at the domestic transfer pricing transactions, considering both the entities, and I'm not taking a scenario where you're dealing with a free zone person here, if both mainland entities interact, both get taxed at 9%. So there is no base erosion happening at the entity level, at a country level. I think it is because of this reason you'll see when the local file requirement came in, they are specifically excluding such transactions to be formed part of this local file requirement. Which means, in a way, the authorities also consider that these are not the transactions that they might be going for at the end of the day. Unless your interaction is happening with a free zone, where there's an arbitrage getting created, where under a free zone you avail zero, and under a mainland you end up paying an expense on which you get a deduction. That seems logical. There, of course, you need to have a tracking mechanism. But if I objectively see a transaction happening between two RPTs, a benchmarking coming, as I said, I may not be the expert here, but so far I know the local file requirement doesn't kick in. You may not have to include those transactions in the local file for these, for these transactions.
Okay, so TP means transfer pricing. TP means look at the practical part. Look practically, right?
Sorry?
Look practically. It's not required. It may not required. There is no tax evasion there.
No, see, whether FTA will come out with this kind of a benchmark, hard for me to speculate. But if I look at the principle, currently the principle says these transactions, when you deal with the two domestic parties, is not something coming part of the local file. Then are we saying we don't need transfer pricing here? That's not an answer I'm giving here, right? And I'm not commenting on this. But I'm only saying the consequence. You may not want to have this included in the local file is what the government is very clear about.
Which makes sense. Now, moving on to the next question, let me go to Basil. Basil, this is again on accounting. An entity is getting liquidated. Entity is getting liquidated, has filed for liquidation. It has accounting income, and that accounting income is nothing but the write-off for receivables. So they have some payables to be done, not receivables. Jahid has written by mistake. It should be payables. There are some payables. They are writing it off, and when they are writing it off, it shows in their financials as income. They have already filed for liquidation. How this should be dealt in corporate tax?
The simple answer is taxable. So if it's in your book income, it's taxable unless you find some sort of an exemption out of it. When you talk about a write-off of a payable, that's a gain to you. That's a relief because you've written it off. I don't think you can argue that's an unrealized gain. So that's probably realized because it has been written off. So that becomes taxable.
Will your position be same if if these payables are pertaining to period 2023, 2022? Will your answer be same if these payables are for the period 2022 or 2023 when taxes was not there, corporate tax was not there?
If the reversal is happening in a taxable year, that's what matters. Then
so irrespective of the period of incurrence, if it is reversal in the current period of taxes, you may have to pay taxes on that. There is no levy to that. I'm coming to, again, individuals. Oh, you want to add something? There is a lot of echo. I'm also not able to hear it. Can you bring a mic down, sound down, please? थोड़ा सा नीचे ले जाइए. हम एक दूसरे को नहीं सुन पा रहे. Normally, husband wife एक दूसरे को नहीं सुनते हैं. यहाँ हम panelists एक दूसरे को नहीं सुन पा रहे हैं.
You keep little away.
I keep down?
Yes.
This is fine? Yeah. You are able to hear me? Everyone is able to hear me? Perfect. Now, next question. This is about natural person. Okay? It says, in case director has similar business in UK, director has similar business in UK, like UAE, and has taxable turnover exceeding 1 million from that business. In UK, he is having more than 1 million. From a similar business, does he need to register as natural person, Pratik? Does he need to register as a natural person and subject to UAE corporate tax? He has having business in UAE as well as similar business in UK, generating AED 1 million in number.
Perfect. So first is you need to see what is the legal type of entity in the UK. So if it's, let's suppose, I am an investor or I am a director in a company, I am a shareholder in a UK company, which is a, let's say, UK incorporated company, then it is anyways a separate legal entity from me, and it would be incurring its own taxes in the UK. So unless there is a poem coming into the picture, there would be no tax liabilities in the UAE. Now, second scenario could be that I am based in the UAE and I am taking decisions for a UK company, then it becomes a case of place of effective management and control. The third scenario could be that I'm based in the UAE, and let's suppose I'm selling some goods or doing some transactions with a UK business. And in that case, yes, if like I'm doing it in my own personal name, I have a license to do it. I have a sole establishment license or a natural person license, and I'm generating a revenue of more than 1 million, even from transactions with a UK company, I would be subject to corporate tax. Because the thing is, when you are subject to corporate tax as a natural person, you need to see your worldwide business income. So my income could be coming from UAE, from outside the UAE. As long as I'm generating the income for business purposes in my personal name, having a relevant license, it would be subject to taxes.
So if you are able to establish the place of effective management in UAE for the UK business, you are not acting as a shareholder there, then it may be taxable as a natural person if you are generating that income, not as a shareholder, because that will be a dividend.
Yes, so I mean, so poem is different. So for example, if there's a UK entity which has a place of effective management and control in the UAE, then that entity itself will need to register here. So the natural person part is excluded. It will be the company who will be registering as a poem, and it will be paying taxes on its worldwide income.
Perfect. Last question, and I think this question, Manu, must have faced multiple times. Again, I have 5 questions from 5 different members. What happens to DMCC? What are the transactions of DMCC? Can that be considered as a qualifying free zone entity, and can it work? DMCC, 5 questions, 5 different members. What is your take on DMCC?
The qualifying free zone question will come when you are doing a distribution activity. So your point is, you are doing distribution activity, you want to get the qualifying benefit, right? This is the purpose of the question. Whether we can try to get the DMCC as a qualifying free zone, that is not in our capacity. What we can do is that, if you are doing business from a designated free zone and establish P, you want to add something?
I understood that. Basil took that because he will add something. You conclude, then I'll go to Basil for the concluding remarks. Oh, he's just holding for him because he's drinking water. I thought Basil will add something there.
Okay. I thought you are telling me to not to go beyond that. This is the question everybody is having. Before this guidance note released, I 100% was with the stand that a DMCC company cannot get the high C sale or whatever the distribution activity benefit. But if you establish a P, each PE has to look into whether it is core income generating activity, doing a core income generating activity with a substance or not. There is a chance there. DMCC is not a designated zone, so conducting business from designated zone will not meet the requirement of conducting a business from the DMCC will not meet the requirement of distribution activity. However, if you are able to establish your businesses being distribution activities conducted from designated zone, you will get the eligibility.
Manu has given you the answer or tax planning. Look for a PE to create if you are DMCC company and you are involved in high C sale. Thank you very much for the panel, to the panelists. Give a round of applause. They not only took the sessions but answers our members' questions. Can we have the conclusion, sir?
So thank you very much, the panelists and our Vice Chairman, Jayaprakash Agarwal, for a great session. Give it a big round of applause to all the speakers, the panelists, as well as our Vice Chairman. Can I request our Chairman and also Dikshit to join on the stage to give a token on behalf of all of us to Mr. Basal, who joined in the panel with us. With that, we come to end of the session. Thank you, everybody. And I'd like to thank the sponsors, our title sponsor, Bricks and Wood Real Estate, principal sponsor, MBG, Tally AGMC, Lulu, IFCO, Motilal Oswal, Olam Agri. Platinum sponsors, Nadeem and Umendra, Chartered Accountant, UHY JAM, SBC, HSBC, ASPA, National Bonds, ECAG Group, HLB Hump. Also like to thank our media partner, Khalish Time, valuation partner, Windmills, institutional partner, Delhi Private School, banking partner, Bank of Baroda. And at the end, thank you, everybody.